Good morning, everybody. Welcome back to another episode of the Market Open. It is Monday, September 23rd, 8:47 a.m., and we are here live once again on the Market Open. This is the last trading week of September, and what's going to be really interesting here is that September for the past 5 years has been a bad month, bad meaning down 5% on the month. So far, September's up about, I think, 1.5% for the month. So if we survive this week over the next 5 days, it looks like we are going to end the month in a pretty strong way. And that is going to kind of be contrary to what everyone thought was going to happen in September. And to be fair, September 6th was one of the worst days of the year. A lot of us felt that September was going to be tough. Maybe this last week, September continues to be tough, but there are some pretty strong catalysts this week that could give some good economic data and some good macro data in the context of the things we care about, like unemployment and inflation. We got PCE on Friday, which the Fed cares about the most, to potentially get the markets to be happy with the data that we're getting. On top of that, we've got some Palantir news. We got a Palantir downgrade this morning, not downgrade in the stock, but downgrade in the sentiment around if it's going to market perform or be neutral. So I want to talk about that. Probably a reasonable downgrade, but notice that the fact that the stock itself wasn't downgraded is why the analyst kind of feels the stock still has momentum, even if the valuation might not be supporting what we're seeing right now. Intel, we got to talk about Intel. They're up 5% right now. Yesterday, big deal with Apollo, potential deal, not a confirmed deal, but Apollo may be investing $5 billion into them. So that might be helping their tangible book values because they get another $5 billion on the balance sheet. And then Bitcoin is moving a lot higher. Bitcoin, it's down a little bit in the pre-market, but it's still holding the 63,000 level, which is just incredible. I mean, it's actually holding in the 60s and not really finding its way going back down to the 57, 58s, which is it has done for the past 5 months. Every time it got to the 63 or 62, just came right back down. It's holding up on these levels. And so we'll talk about rate cuts, the implications of rate cuts, what that means for Bitcoin, what that means for crypto, and obviously what that means for the broader market. We also got our boy Bostic, who had some new quotes this morning. So we'll see what he said. Again, echoing the sentiment that the labor market is important to him. And so we'll analyze what he said and if that matters for the markets, at least for today and definitely over the next couple months. Let's get started with Palantir. Thank you, everybody, for being here today. John, William, P. Thomas, Bay Ray, Lena, Sonam, Sundown Sam, Crowd Control. Thank you, everybody, for being here. Greg says, Amit, you shine like a bright star on Farzad's podcast. You done good. Awesome. I'm happy you enjoyed that podcast. That was a fun one. So hopefully his Tesla audience got to learn a little bit about Palantir. And hopefully you guys got to get a little deeper into it. One of my friends who watched the podcast said he finally understood what an ontology was after my, 3-minute explanation of an ontology on that podcast. So hopefully that helped. I don't think it was the best explanation, but hopefully it was a little bit better for some people who were still confused about certain things. Chad, what's up? Player one, Lenny, Krishna, Practical Investing. Thank you, everybody, for being here. Richard, Maddie Gersh, Rock and Ronnie, Novell, San, GC, Andy, Robert, Blake, Mark. Thank you, everybody, for being here once again this morning. Stevie Stone says, say my name. Stevie Stone, thank you for being here on the show. Dexter, Gene, what's up? All right, so let's do Palantir. Let's talk about Palantir. This pod was on Friday. It's on Farzad's channel. It's also on my Twitter. That's in the description. It was like an hour, 30 minutes with me and him talking good old Palantir. All right, so we got a downgrade by Raymond James to market perform from outperform. So basically they said, hey, it's going to do well, but it's not going to do better than the broader market. They say, while we remain enthusiastic about Palantir's longer-term positioning in AI, we are downgrading our rating to market perform from outperform, given our view that shares need to consolidate stellar gains over the last couple of years and grow into its rich valuation. I think that's pretty fair. I mean, it's not one of those things that's kind of a ridiculous thing to say. I've been saying it for the past couple of weeks. Consolidation right here from this 32 to 37 range is very reasonable before it makes the next leg higher. However, the technicals, and we talked about this yesterday on the Sunday shows, and I'll show it again. The technicals are showing that maybe this thing does not need to consolidate. Maybe this thing can just keep going higher into that 45 range. So we'll talk about that. But it is fair for Raymond James to say, hey, maybe there needs to be a little bit of consolidation here. What else did they say? So they said a few thoughts. Palantir shares have appreciated 120% year to date and sixfold over 2 years versus 20% and 50% for the S&P 500. Obviously showing an outperformance. Valuation has expanded fivefold, making it the richest software name against comps at 26.1 times full year 2025 sales. S&P inclusion announced on September 9th catalyzed a 23% move over the last 14 days, leaving significant positive estimate revisions as the lone catalyst from here. Essentially, in a nutshell, saying, hey, the stock's up a lot. It's been up a lot. And because it's up so much, it's one of those things where you should be concerned about if there is a risk-reward profile that's left in investing now that the stock's at $37. This is some TA. As you can see, the volume shelf resistance at 37 is pretty aggressive. Once you get above 37, you're looking at 38, 39, 40 with almost zero volume shelf resistance, meaning Palantir could do a lot of price discovery in those ranges. And if the buyers come in, then the buyers could come in pretty heavily right there. And this is another chart that we're looking at right here. As you can see, almost every time it hits the certain level it needs to hit, you get a little bit of a downturn, then it comes right back up. It gains momentum. That's highlighted by the three squares right here that you can see on the chart. One could argue we take a dip all the way back to 32.50 and then it rebounds into that $40 range, which has happened pretty much every time on these last three runs. As you can see, these big candles right there after it comes right down. And maybe there's a shot that this thing actually goes higher. So look, my perspective on Palantir, there's a 50-50 chance this thing goes back to 30 or this thing goes to 45. I really do think it's 50-50. I don't think it's like 70% chance it goes to $30, 30% chance it goes to 45. I think it's 50-50. I think there's a 50% chance it goes to 45, or let's call it $40. And then maybe from there could break out to 45 and a 50% chance it goes back down to 30. And the reason I say it's 50-50 is because the momentum is very aggressive when it comes to Palantir against the valuation. And so although the valuation is aggressive, the momentum is even more aggressive, in my opinion. The narrative is more aggressive. By the way, Chris Camillo, Palantir right here, down about 1.26% of the pre-market. He'll likely be on the show tomorrow on the market open. Pretty sure that'll be the case. We'll see if there's any scheduling conflicts, but for about an hour on the market open tomorrow, 10:30, he'll talk about why he is super bullish on Palantir. And so, yeah, I think people like him getting excited about the story, more and more people talking about it. That is something, along with the fact that we're going to get rate cuts. We might avoid a recession. And as a result, we could have this scenario where the S&P 500 really does hit the like 6,000 range by the end of the year. We'll talk more about that in the macro. But if that happens, Palantir wouldn't be justified going to 45, but it might just happen just because the rising tide would lift all boats there, even if that boat is already lifted. So I think if we get a bull run and towards the end of the year, it can really help Palantir. But I think there's also a chance it can consolidate because Carp sold 9 million shares, right? You're starting to see people say the valuation is getting up there. And they can take some time growing into the valuation. The key kicker here is Q3. If Q3 they come out with like 35% growth or something ridiculous like that, I don't think they're going to do that. But if they do that, who knows? Then I think all hell's breaking loose, dude. I think all hell's breaking loose. Not just 30%. If it's like 35%, it's like 27, 28%, whatever. But if it's 35% growth, like, yeah, this thing's going to 50, bro. This thing is going hard. But, you know, it's going to be hard to do that. So if they don't show that growth yet, then I think we consolidate at a at least the 32s in that type of level. But we'll see. I think it's healthy if we pull back into the 32s. I think it's very healthy. I know people would be upset, but I think long-term investors should be happy and feel that the consolidation of that range matters, right? I don't think we want to see this thing go to 50 just out of nowhere, and then, you know, especially longs that want to get more shares have to start buying it at 50. Like, especially if you're not selling it, like the worst thing that happens is the stock runs up, you're not going to sell, and so you just like feel nice on paper. But realistically, there's no profits that are being taken. And then it has this massive retrace. And then you kind of just, you know, waited that whole time. Versus next time it gets to 50, it can hold 50. Like now, I think we're going to hold the 30s because we got to 30. But I don't know if we're going to hold 37, 38 because those valuations are just intense. Granted, the caveat here is if the growth in Q3 and Q4 are monumental, meaning we're accelerating above 30%, I don't think we have to stay in this range, because you could argue, hey, Palantir needs 45% growth to justify $80 billion market cap. Sure. But if you get 30 to 35, the market's going to be happy. People are going to be happy. People are not going to be saying this is a low growth tech company anymore. And that narrative itself will add like at least tens of billions of dollars to the market cap because people are just going to be excited to buy the stock. Every time Palantir goes up by $1, and that's about 2.4 billion to the market cap. So I would imagine people get excited and they end up buying it. But really, the growth is what we're going to have to see going into Q3. Thomas says trimming is always an option, and you shouldn't feel bad about trimming a position at overvalued levels. I agree. We talked about this on the Palantir Weekly. If you feel a little uncertain about the investment and you just want to take some profits, that's fine. My only caveat there is if you have a cost basis that is significantly lower than the average person, and for retail, right? Most institutions, their cost basis is in the mid-20s. Most retail cost basis is in like the single digits, if not the low double digits. That's where I would say, hey, these are generational prices. You might not get, Palantir at $11 ever again. So you want to think before trimming it. And not because the cost basis matters, but because you have such a margin of safety that if you want to average up, because your cost basis is so low, because you did the smart job of investing when no one wanted it, you can increase your cost basis over time, but not aggressively because because you have a great margin of safety. So even if Palantir fell 50% and you have a cost basis of like $10, right? You're still up a decent amount on those shares, which is the fun part about being early into the investment. So when I talk about cost base, it's not for it to look funny on your brokerage account. Be like, oh, I bought it at $10, and one day I get to look at it at 100, and 100 minus 10 is 90. It's not like that. It's if you want to buy it at $35 or $50 one day, because you have such a low cost basis, you are going to be able to average up in a way that doesn't ruin the original cost basis you had simply because of the margin of safety. So I think it's one thing to think about. Now, granted, if your cost basis is in the 30s, I think taking the profit right now is not the worst thing in the world, especially because if you do get a retracement back to 30, you can just buy that dip as well. So we'll see. We'll see what ends up happening. Also, we are in the S&P 500 officially. We had the volume of 400 million shares on Friday. So we are down 1.26% already. I will be very curious to see if we're going to get a reversal as the market opens. Market's green right now. S&P 500 is green as well. So you got a green market. Palantir's red. Historically, when stocks get into the S&P 500, they do tend to fall. I think it's like 15 to 20% on average. That's just kind of what has happened with stocks after S&P inclusion. They get a pump in, they get a dump out. We'll see if that dump out lasts with Palantir, if it's the same, or if Palantir is special here and it's, you've got enough people to buy it that don't really care about it having to dump after the S&P 500. But we'll see if it ends up having a dramatic move to the downside. The other final thing, again, covered calls, right? If you really hate the valuation, covered calls is also a way to protect against the downside. Arshier says, I sold some covered calls at 43 2 months out and bought some puts, getting scared a little bit on the valuation. Yeah, I think that's fair. Either we are all, I think all of us as a community are having a legit discussion and fear about the valuation. And I think that's healthy. And that shows that it's a community that's full of smart people. If this was and I don't want to offend people here, but if this was like the GameStop community, I don't even think they would care about the valuation. They would be like, let's just go higher. But with Palantir, because we're actually smart people and we actually look at things like valuation, we can have a congruent discussion of, hey, this doesn't make a lot of sense. However, one of the caveats here is that even people like us that are trying to be prudent and have a reasonable understanding of the valuation in context of the AI innovation angle, we also might be underestimating how much they're going to grow and how much the sort of AI software stack leads into top line revenue growth. Now, I don't think that happens next quarter. I don't think that happens the quarter after that. I think mid 2025, you get that crazy quarter where everything starts to just ramp up at a different level. But if that does happen sooner than we think, then yeah, this valuation is not going to matter. It's just no one's going to give a shit about the valuation. No one. They're just not going to care because it's going to be a narrative that takes its own tone. You're going to have millions of people that get excited about. I mean, think about NVIDIA right now. NVIDIA now has so many dip buyers because you've got so many average people that don't really understand what a GPU is, but they're so convinced on the NVIDIA thesis. They've heard Dan Ives talk about it a trillion times that they're going to buy a dip on NVIDIA and they're not going to care that much. And so I think that's going to happen with Palantir. Obviously, Palantir is not having that type of NVIDIA growth, but if that growth happens before we think it happens, and I think most of us think it happens by the end of 2025 or mid 2025, then we're probably going to see some more momentum and people are going to buy it. And it's going to be good for people who bought it years ago because we're going to see more buyers get into this world. Did I just call Gamer stupid? No, I did not call Gamer stupid. However, that GameStop earnings was not good. It was not good. However, it did go up because someone bought like 92 million worth of it on the dark pool. Where's GameStop right now? Pre-market. GameStop. Yeah, it's down a little bit. It was up 12% Friday, down about 1% on the day. In the pre-markets, Bitcoin 63, Palantir down 1.2, Google's up 0.5%, ServiceNow's up a little bit. We got Robinhood up 0.53% of the day, Tesla 243. Wow, Tesla's up 2% in the pre-market. Look at that. Tesla having a hell of a couple weeks right here. Going into this 10-10 event that is officially happening. So Tesla right here, 243, Starbucks 96, Google again 163, CrowdStrike as well. They were 300 in the overnight markets. Right now they're at 299. So it looks like they might make their way back to the 300s. Amazon right here, 192. Amazon finally breaking out above 190. Nvidia up about 0.28%. Bank of America down a little bit, and you got Berkshire Hathaway up a little bit here as well. S&P up about 0.23%. Okay, cool. Not bad. So we got a decent pre-market. Let's take a look at Neel Kashkari. He is one of the Fed presidents. He talked this morning. Let's get his thoughts on what he has to say. This guy has been one of the most bearish guys on rate cuts, but he officially agreed that a rate cut was the right decision by 50 bips. So let's get his logic, his take on it, and where he sees the Fed going over the next few months.
The basis point rate cut last week and much more is Neel Kashkari. He is the president of the Federal Reserve Bank of Minneapolis. He published an essay this morning explaining why he supported that 50 basis point cut, saying that in his view, the balance of risk has shifted away from higher inflation and toward the risk of a further weakening of the labor market. And President Kashkari, thank you for being here.
Thank you, Becky. It's great to be with you.
We've had a lot of people trying to figure out exactly why the Fed went 50 basis points last week. So maybe you can explain. If you are worried about the labor market at this point, is this the equivalent of saying mission accomplished when it comes to inflation?
Well, I think all of us are reluctant to ever declare mission accomplished, but certainly the risks have shifted. I look forward and I think, which risk am I more worried about right now? A surprising uptick in inflation or a surprising uptick in unemployment? It's the latter, at least it is for me. I think right now we still have a strong, healthy labor market, but I want to keep it a strong, healthy labor market. And a lot of the recent inflation data is coming in looking very positive that we're on our way back to 2%. So I don't think you're going to find anybody at the Federal Reserve who declares mission accomplished, but we are paying attention to what risks are most likely to materialize in the near future.
That makes a lot of sense, but it also makes a lot of sense for why you would have cut 25 basis points. Why go 50?
Well, I think it's a judgment call. Ultimately, even I said, I've been on the more hawkish end of the committee over the last couple of years. Even I say after 50 basis points, I still think the policy is in a net tight position. At some point, we're going to be coming to the question of, are we at around neutral? There's a lot of ambiguity around neutral.
Wow. So even after 50, Neel Kashkari, who just proclaimed himself to be a hawk, says, I still think we're tight even after 50. I mean, it seems more likely than not we're probably going to get another 50 if that's how he feels.
I write about that in my essay. Other people comment on it. And at some point, we're going to have to debate, are we getting there? I think after 50 basis points, we're still in a net tight position. So I was comfortable taking a larger first step. And then as we go forward, I expect on balance, we will probably take smaller steps unless the data changes materially.
I mean, I guess that's the biggest question for it. As somebody who's watched over a long period of time, I'm used to 50 basis points signaling the Fed thinking it's behind the curve and that there's a real emergency in order to do something like that. If this is things are looking great, but we're still cutting 50 basis points, I don't get it.
Well, it's just we're in a relatively tight position. Let's take a meaningful step to get on our path. Ultimately, we want to get back to a neutral policy stance where the economy's in balance and we're not pushing the economy one way or the other. And this was just a larger first step to get us going. I think if you look, we've held rates at a pretty high level for an extended period of time, longer traditionally than history. And this is just acknowledging, let's take a step now toward neutral, recognizing that we're still tight.
I guess part of, we've had so many armchair psychologists, and we've played some ourselves, sitting here trying to figure out what the reasoning was behind it. I'm going to throw a couple of theories at you. You tell me if anything sounds right, if anything sounds crazy.
Okay.
One of them was, okay, the Fed was behind the curve on raising rates when inflation was really hot. They don't want to repeat that mistake. Another was, okay, this is an unusual time in the calendar where, they didn't move in July, didn't have a meeting in August. They don't have a meeting next month. So maybe this is taking the combination of all those 4 months and kind of putting it into one package. And then you have people asking about the election here, too, and why make a big move ahead of the election?
Well, I think the first two, certainly we were late and I was late in raising. We always want to learn from our mistakes and we don't want to repeat those. That's not what's driving this move, but we are aware of the mistake that I think that we collectively made in holding rates a little bit low for a little bit too long. So there's always learning that's going on.
Okay, so he just acknowledged they made a mistake in 2021. That's not new news, but he is saying, hey, we were late the first time, which is when inflation happened. Maybe we need to be early on inflation deaccelerating.
I do think that the calendar in terms of when our meetings happen and when the data releases happen, that's a factor. And we get data with a lag. The GDP data, it's been well documented, is backward looking. And then by the time we get it, by the time we can factor it in. So that's always ever present. And then the election, as Jay Powell has said many times, and I think all of my colleagues have said, it's simply not a factor in our deliberation. And so I think the first two theories that people offered you, those are not crazy theories. All of those go into our risk assessment of what's the best action we can take to ultimately, hopefully achieve a soft landing and preserve our dual mandate goals.
Michelle Bowman, the governor, Michelle Bowman, actually dissented. She voted for 25 basis points, and doesn't seem like a big deal to have one dissent. It's the first time there's been a dissent, though, at the FOMC since 2005, so almost 20 years. Was it a more contentious meeting? Was it a more thoroughly discussed meeting?
There was active deliberations. There was active deliberations at the meeting. There was a lot of discussions, obviously, leading up to the meeting. And ultimately, look, for those, whether it's Governor Bowman or many people on Wall Street who said, hey, 25 basis points is the right action, I don't think I would have argued against 25 basis points and said, oh, no, we're making a mistake. I think that 25 was reasonable, 50 was reasonable. It was just ultimately the judgment of the committee that 50 made more sense to get going. What's interesting is that nobody on the committee was saying we should be holding here, not even Governor Bowman. And so there was unanimous view that we should take steps to begin dialing back our policy stance in the face of the changing landscape of inflation and employment.
I mean, there you go, folks. It seems pretty obvious right there. A lot of people thought, not a lot of people, but there were certain people that said there's no reason to cut. There was absolutely a reason to cut. Whether it's 25 or 50 was the big debate. But it made sense to do the cut given inflation was coming down and obviously given the labor market was starting to get a little bit more aggressive than what the Fed wanted to see to the downside. So there you go. Neel Kashkari seeming relatively dovish right there about the cut. It does look like if he says we're still tight after 50 bips, we're going to get more cuts. I think Bank of America is expecting another 75 bips. I think that's fair, which would give us 125 bips for the year. And if that's the case, I just don't see how that's bearish. I really don't. Again, if they give us another 75 bips because something's breaking and then there's a piece of data that comes out in the next couple of weeks and we figure out what broke and then kaboom, the economy collapses, then yeah, that's how the rate cuts are bearish. I just don't know if that happens. I really don't know how that happens. And again, for all the people saying these rate cuts are bearish, you've got to point to something that's about to pop, and you might be right. But at least I'm ignorant to seeing what is that thing that's about to pop. We have to find out what that thing is that creates this downturn. You want to compare to 2000, 2007, you got to have some type of undergirding bubble, whether it's credit card debt, you could argue that, but it has to be something that's going to pop massively like .com and housing to create this epic crash. And so far, I don't see that. And if that doesn't happen, then maybe we end up bullish. Also, Goldman Sachs, we talked about this last night, but Goldman Sachs sees us adding about 140,000 jobs for the rest of the year per month, which is very bullish in my opinion. I mean, July, we barely added 100,000. And so the fact that Goldman Sachs is saying, hey, we think we're going to add probably 140,000 for the rest of the month, I think that's super bullish. And if we can beat on those levels, that'll be great. But if we had 130 to 140, sort of a break-even hiring pace is what Goldman thinks. We added 142 in September 6th. The market didn't like that number. They expected 160. If the expectations go to 130, 140, and we start adding close to the expectations, maybe even a little bit above it, you're going to get unemployment not be the biggest concern by the broader market. Now, you can say none of those jobs are real. You can say the BLS will revise them. Sure. But when we get those revisions is when we're really going to see the market kind of interpret that. Until then, if we get those top line numbers at 130, 140, I don't think the market's going to be too upset about it. Doug says passive index investing is a pillar the entire market is built on. We all assume it's perfectly safe. That means it's not. Yeah, but the thing about passive index investing is it stops happening when something actually breaks. Like you stop getting those passive flows and fund managers stop giving those flows and clients start calling up their fund managers and saying, hey, stop putting my money into blah, blah, blah every single week after people freak out. Like there has to be an event that freaks people out is what I'm trying to say. I'm not saying credit card debt isn't insane. I'm not saying the interest we're paying isn't insane. I'm not saying personal savings rates being at a low isn't concerning. All those things are concerning objectively. The problem is to stop this train from going higher, to stop the market from still interpreting good Q3 earnings growth as positive and inflation coming down as very positive, given this has been a 2-year fight against inflation, and then rates coming down as positive, something has to seriously break. And in 2021, it was obviously inflation reaccelerating and valuations being absolutely insane. There was no reason Tesla or Meta should have been valued at $1 trillion in 2021. And so we had a collapse. There was no reason in 2007 that, people who couldn't pay their mortgage back were getting these mortgages. And there was no reason in 2000 where pets.com was going public. So, I mean, like there has to be something that really freaks people out, makes them feel scared, makes them want to not buy that cup of coffee, makes them not want to go traveling. If you look at the TSA numbers, people are traveling like crazy. Look at the cruise lines, people are traveling like crazy. People are going out to restaurants. I was at a restaurant this weekend. There were plenty of people. Like it's one of those things anecdotally where I think we're going to have to see a lot more fear and pain before people start freaking out and stop investing. And I don't know if we'll get that. You really threw Meta in there? Yeah, there was no reason Meta should have been worth $1 trillion. I remember seeing that. This was July 2021, and they were losing like $80 billion a year on Reality Labs, and they were over bloated by 30,000 employees or 25,000 employees. Like Meta had to do a lot of changes to get back to $1 trillion. And obviously anyone who bought that dip at 88 has done very well. But my point is, like, valuations in 2021 were stupid. Valuations in 2000 were stupid. And then valuations in 2007, they weren't stupid, but they became stupid when everyone, kind of almost lost their house and realized they don't have money to put into the market. I don't know if I'm not looking at the right data, but I don't see that happening again right here. And that's the broader problem. But maybe it pops up. Maybe it does pop up, and then we'll see what happens. The good thing is with rate cuts coming down, a lot of the cost of borrowing and the cost of financing, all the loans that people are concerned about, that also starts to go down as well. It's not good. Doesn't get rid of the debt, but the fact that the cost of borrowing goes down at least a little bit, I think also gives consumers a little bit of relief. We have PMI at 9:45. We got the market opening in 15 minutes. At 9:45, we have U.S. services PMI and manufacturing PMI. So consensus is 48.5 on manufacturing, which would be higher than the previous, but lower than 50, which means contracting. And then consensus is 55.2. Previous was 55.7 for services PMI. B of A estimate is 55 on services and 47 on manufacturing. So far, PMI data has not mattered as much to the market as consumer data. Like I would bet retail sales data matters 1 trillion times more than manufacturing and services PMI. Again, manufacturing being below 50, when you're below 50, you're contracting. When you're above 50, you're expanding. We are below 50, but we are increasing month over month from the previous levels of below 50, which is a good sign, but we still are theoretically contracting. That is kind of bearish, right? That means that the economy is not producing as much, but market doesn't care because as long as consumers are spending, which hasn't, again, retail sales data for the past 3 months, it hasn't gone down. That's where you get the market being a little bit more excited about what the consumer is going to end up showing up. Last week, here were the weekly inflows on Bank of America's clients. So this I thought was really interesting. You had $38.6 billion in Bank of America clients' capital go to stocks. You had $15.5 billion go to bonds. You had $500 million go to gold, $500 million go to crypto, and you had $7.6 billion go from cash. So cash had its first outflows in 7 weeks of $7.6 billion. Which makes sense because now in that Bank of America money market fund, you're getting less than 5%. Bonds had the largest inflow in 4 years at $13.9 billion. People trying to lock in the yield on those bonds before those yields come down. U.S. stocks, third largest inflow in 2024, $33.8 billion. just on US stocks based on these 50 basis points. I can't imagine when we get another 50 basis points what these inflows are going to look like. If we avoid a recession, you're going to have money that is going to go into equities. This is why a Palantir gets to $37, right? This is why Nvidia can hold this 120 range. It's because you have more money coming in. This is why Apple and Microsoft hit basically close to all-time highs on Friday. Value stocks, largest inflow since December 2023 at 4.2 billion. Consumer funds, largest inflow in 8 months at 900 million. Then utility funds, largest outflow since May of 2024. Utilities typically people buy as a hedge against the recession. So it makes sense that money's leaving utilities and going into growth. Whether those people will be right or not, we'll see. But it seems like in general, people are realizing, hey, this is a time to be a little bit more risk on, especially with rate cuts coming in. And we know more rate cuts are coming versus be kind of scared and defensive in the utilities. Although utilities have also had a good year because energy has done phenomenal this year as well. And so we're going to see what ends up happening. But so far, macro data, at least today, is looking okay. And we'll see over the next couple of weeks what it ends up looking like. S&P 500 at 569. IWM, our small caps right here, are at 222. Tom Lee last night basically said, hey, we like that the Fed did 50 bips. We think it's bullish for small caps. However, election volatility is something people need to be very concerned about. And so for the next 8 weeks, he's kind of cautiously saying to buy the dip because he thinks there will be some decent opportunities based on election volatility and just kind of the lead up into the election. The last 8 weeks leading up into the election for the stock market are some of the most chaotic weeks. And then after the election, the market kind of digests it and moves on. So we'll see if the next 8 weeks also continue to be a little tough. Chris says, what I'm hearing and what I'm seeing varies. Institutions seem to be buying. Media is telling people to consider pulling back. I'm wondering if this is a pattern to move money from us to them. It's interesting. It's a good point. Institutions agreed are buying. The media says there is a bit of a pullback. And so the question is kind of where is the logical divergence between the two? I think there's a couple of ways to think about this. I think number one, it is very stock specific, right? So with Palantir, when the media is saying, hey, there might be a pullback, I don't think the media is crazy for saying that because obviously the stock is up, 115% year to date, and they haven't put up the growth that Nvidia's been putting up to justify these types of gains. However, on this channel, we talk a lot about how, Palantir is valued on things other than just its quantitative features. So when the media is saying, hey, like Raymond James coming out, who is not part of the media, but right, the analyst community saying Wall Street thinks Palantir should go down a little bit, I think that's fair just given its stock performance. Now, for the broader market, should it have a necessarily pullback? I think a lot of the media saying that is, they can take out some certain pieces of data and then connect that data to make a narrative for it. But you could do that on the bullish or the bear side. My perspective is 50 bips is bullish and another 50 bips is probably going to be more bullish. So on individual stocks, I think if the media says, hey, this thing's coming down, it's up a lot, you need to be a little cautious. I think that's fair. Whether they're right or wrong, we'll see. But institutions obviously are buying because they don't have the ability to have the luxury of getting 5% on their capital anymore. And clients want a big return. And if they see Palantir grow up another 30% while their money's collecting 4.75% in a money market fund, they're going to be upset, right? And so I think that's why you're seeing at least some of the institutional investors start buying. Also, Palantir had to get in more institutional investors because of S&P 500, right? Now the question is going to be, can they hold those institutional investors for the coming months without dropping another 15%? After getting into the S&P. So we'll see. Samir says, what is the next entry point for Palantir? I want to buy the dip around 30 to 32 if we get there. If that happens, I think that's a fair place to start thinking of buying the dip. But I think there's going to be people at 35, 34, at 33 that are going to go in. And so I don't know. I think even with Palantir, you need a crappy earnings to get back down to 30. Or in general, you need a real nice volatile next couple of weeks before the U.S. election to get back down to 30. Otherwise, there's just a lot of people ready to buy this thing. And I would imagine a lot of fund managers that are not fulfilled with their allocation sizing are ready to buy this thing if it has a 10%, 20% dip. So 30 would be an amazing opportunity if it happens again, given the tides have changed. I think below 30 is also great for the long term. Maybe not the short term, but the long term, I think it's fine. I just don't know if we get there. So we'll see. Do you think we can go back all the way down to the 20s? Yes, if 2025 sucks. Like every year we have an epic collapse of some magnitude. This year it was August 5th. 2023, we had a bunch of them. Silicon Valley Bank collapse, all that stuff. So it happens every time. I don't have any doubt we will have some type of market correction in 2025. The question is going to be, Will Palantir be 50 when that happens and then, drops down to 40 or 35? Or will Palantir be in the 35 and it drops back down to 23, 24? Or is Palantir going to be resilient enough to deal with that market correction? We saw on August 5th, pretty much every stock got hit. So every stock usually takes a little bit of a tumble. But we'll see. I think 2025, we will have more opportunities. The question is going to be, where will Palantir be at that range? And if the dip ends up, leading back to those levels. NVIDIA and Baba did have a partnership today. Yeah, so let's look at Alibaba right now. This one was interesting. We haven't seen Baba use NVIDIA to up their ante. Baba right here up 1.63%. It's my belief that pretty much every company goes to NVIDIA and they're like, hey, can we just can we use your name in the press release, please? Can we find a way to show the world that you're helping us? And I think NVIDIA loves it because it's more brand recognition for NVIDIA. And then it comes Alibaba loves it because NVIDIA's name is nice. So right here, this came out this morning. Alibaba's cloud computing services unit and semiconductor powerhouse NVIDIA are collaborating on an artificial intelligence initiative that will enable Chinese automakers to advance the autonomous driving experience for smart vehicle owners. Alibaba's Cloud Qwen portfolio of proprietary large language models, including Qwen 2.7b and Qwen 2VL. So that's basically their OpenAI, Gemini, and Llama, because those companies can't use it in China, have been integrated with NVIDIA's Drive AGX Orin platform for autonomous vehicles. LLMs are the technology underpinning generative AI services like ChatGPT. This marks the first integration of Alibaba's cloud large AI models into NVIDIA's Drive automotive platform, which major Chinese electric vehicles like Li, Great Wall, Zeekr, and the EV unit of Xiaomi are using to power their next generation fleets. So basically, NVIDIA is providing chips for Alibaba to have more self-driving, kind of what they're doing with Tesla, but Tesla's obviously doing that completely inside of their own company. It's not kind of being open source to other EV companies as well. All right. That's not too bad. More momentum for NVIDIA. I'm surprised NVIDIA hasn't done a partnership with a Chinese company in a while. So I guess for the self-driving stuff, that's where they think there is some reasonable collaboration. Alibaba right here up 1.5% on the day. Nike's down about 1.3%. NVIDIA's up 0.11. Got the market open in 6 minutes. Nike right here. It was up 7% last week after they nuked their CEO. Now it's down 1.38% on the day. Still trading at 25 times earnings. It's more expensive than Google. I mean, I don't know. It's not the most interesting, but if you bought it in the 70s, I think you kind of enjoy the ride. 21.50 is the 50% pullback on Palantir. Yeah, I mean, dude, if we were to get a 50% pullback right now on Palantir, 21.50, I think all of us would be, unless there's some crazy reason for us going to 21.50. I think a lot of people would be excited to buy that dip. It would be August 5th all over again. But again, I can't see that happening. I can't see $40 billion of market cap just thrown away unless there is a general market pullback or their earnings are so awful that the market's like, oh my God, this is horrible. But that's not going to be the case. They're going to excel. I think they're going to have earnings of 27 to 30% growth. I think operating margins are going to increase. And I think Karp's going to get on that earnings call and he's going to tell the world that this company can be 10 times bigger because AIP is accelerating, yada, yada. You're going to have all of that momentum still baked into Q3, along with another 50 bips of cuts. That's why I think 40 is possible this year, but I also think a consolidation in this range is not too crazy either. Yeah, we got people here. I'd sell a kidney and buy more shares with that. I mean, that would be, and see, this is a psychological thing about a company. Like now, if NVIDIA went to 70, there's a lot of people here that are super bullish on NVIDIA. They just understand it better than everything else, just like a lot of us understand Palantir. They would buy NVIDIA very easily at 70, even if the rest of the world would be scared. And so I think that's the same thing for Palantir. The question is just if we get to those levels. Okay, let's get a perspective from Citigroup in terms of what the rate cuts are going to do for the broader. Get a take from them, and then we got the market open in about 4 minutes, and we will see how we open up on the last week of September.
That they are taking a victory lap on inflation, or they're trying to get ahead of labor weakness?
I think it may be a little bit of both. I think they've been very clear in terms of how they feel about inflation and that they see clearly the data, especially over the past couple of months, going in the right direction. I think we were in the camp of 25 just because the last inflation print that we received there was some stickier inflation in there, particularly when it came to owner's equivalent rents. But 50 basis points, I don't think we should read too much into whether it's 25 or 50. I think it's ultimately what is the trajectory from here. And then we need to look through into the data. As long as the employment data holds up, then this is really kind of aiming for the soft landing that the Fed wants and actually the market wants as well.
Because in the past, you would only see, it wasn't, like you say, it wasn't shock and awe, and maybe it was making up for not cutting 25 at the previous one. But normally the stock markets aren't hitting new highs and unemployment isn't at historic lows. That's not a time where you seem to have not an emergency rate cut, but a significant rate cut. Why? Why not save it for when you might need it?
Look, we're in agreement with you in terms of why not save it for when you need it. But if we look, perhaps going back into July and the data that they had in July and then the revisions to the job reports, it may just simply be that we know that policy does act with a lag. And so looking at some of not really massive deterioration in the employment backdrop, but some deceleration, just wanting to be ahead of that curve. And I think the other thing that we all have to keep in mind is that the Fed's mandate has nothing really to do with where the stock market is relative to its all-time highs. It's more about employment and price stability, and obviously the functioning of markets. So looking if inflation, if that battle has been won, now it's more about the employment backdrop and making sure that we kind of stay around this 4% unemployment rate.
I guess if you believe that inflation was supply chain related after the pandemic, but there's no doubt that a couple of additional spending bills and stimulus in the midst of supply chain problems caused inflation to get pretty bad.
Absolutely.
Now, I know oil hasn't been on anyone's radar screen for different reasons, for supply reasons, I guess. But it just seems like we aren't at 2. It seems like you could easily, we've got all this spending still in the pipeline for infrastructure, for chips, for IRA, for all this stuff. We're not through that at all. It seems like inflation could easily come back. And it might be that the Fed has, that's the main thing a lot of people think the Fed should be concerned with.
And when we look at the statement of economic projections, I think that inflation, I think you're right. They may be kind of overly aggressive in terms of where they anticipate inflation to be. Maybe it's going to hover around that 2.5%, and that's something that could be sustainable for the near future. But I do think, one of the interesting things and how this is impacting both markets and the economy is we're not talking about deflationary forces. We're just talking about disinflation. And so all of that price increase that we've seen is actually still there,
still going up,
which kind of goes.
And AI might be one of the things that contributes to that deflation over the next few years as well. And that's why rate cuts might not be the worst thing in the world right now. All right, we got about 10 seconds left until the market opens. Let's put our eyes on Palantir. Palantir officially today in everyone's 401ks, retirement accounts. If you own the S&P 500, tens of millions of people, you now own a little bit of Palantir. 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. Wake your ass up. Here we go. All right. Palantir opens a little red on the day, 36.64. So we're down about 1.59%. There you go. You got some sell side pressure right there. We're going to see if that reverses. We've seen this reverse many times historically in the past. We'll see if that happens again today on Palantir. 36.68. Let me see where the resistance levels are at for Palantir. Robinhood opens up at 22.88 on the day. Seeing a little bit of reversal right here back up to 36.80. At 37, there are like 5,000 shares. So this is really a question of people selling in these high 36s versus a big wall stopping it. Yeah, look at that. Recovering a little bit right there at 36.99. If it touches 37, then we have a little bit more of a recovery. We'll get back to Palantir in a second. NVIDIA right here, 116, up about 0.5% on the day. S&P 500 opens at 569. New all-time high on the S&P. We did hit 570 last week, but we are at 568.98 right now. We got Constellation Energy. They're up another 1.8%. They signed a big deal with Microsoft last week. That deal with Microsoft has them up 30% on Friday. Again, energy demand continues to be massive for data centers. So You're going to see the hyperscalers probably tap some of these energy companies and give them some more momentum. Intel up 2.5% of the day. Apollo Equity Group is thinking of putting $5 billion into Intel. This comes after the AWS collaboration. This comes after the $3.5 billion Army chips deal. And this also comes after the Qualcomm potential takeover of Intel. Intel has a lot of moving parts to it right now. And I think over the next couple of weeks, we're going to see if Intel can capitalize on the momentum. SoFi at 804, down about 0.19% on the day. Qualcomm up a little bit. FedEx up a little bit after falling 15% last week. Robinhood 22.88. Tesla, wow, 244, up 3% on the day. Micron is up 3.5%, and Bay Ray in the chat is ecstatic because his YOLO call options that he bought are in the money, and he's probably really excited. So now you got to make a decision, Bay Ray. Do you sell those? Do you sell those guys before earnings, or do you wait and do you get really greedy and hope their earnings today that they crush and you make even more money? It's a hard choice, but it's a nice position to be in. But now you've got to decide. So we got Micron right here, 94.55. They will have earnings today after the bell. We'll cover that today. Wait, no, it's going to be. Is it today? No, sorry, it's Wednesday. Oh, so now makes the decision harder. Either you wait till Wednesday or you take some profits today. But yeah, Wednesday, we'll see that. We also have Costco earnings this week and Accenture earnings this week. Where's Costco right now? So we'll take a look at those two later this week. Costco, $901. Palantir, $36.72. So it keeps getting rejected at that 37 level. Baba had a partnership with NVIDIA today. They're at $90. Let's go to the Mag 7. What do we got? Apple is down about 1% after going up 5% last week. Microsoft's down about 1%. Meta continues to go higher. Wow. Look at Meta, dude. Holy crap. Meta at 570. Goodness gracious. Or it's about to be 570. Wow. Google at 165. NVIDIA 116. Tesla again 244. Amazon down a little bit. Meta and Tesla kind of leading the way for the Mag 7 right now. And not really looking back. Where's PayPal? PayPal has some momentum. There you go. PayPal 78. It would be just poetic if PayPal got to like $100. It would be so poetic this year. I mean, the amount of people that just shitted on PayPal, like it got to the point on Twitter where people were like literally like personally attacking PayPal bulls. And it was like, dude, relax. Like it's not, that's not that serious. So, PayPal right here, 78. I would love to see PayPal go higher, but it's up about 1.81% on the day. Their collaboration last week with Amazon, and I think they had a partnership with Shopify. I might be wrong on this, but they had another partnership last week. It's probably not Shopify. It's another company. That got people excited. They also changed their logo, and Alex Chris just reaffirmed that they're on the right trajectory. Micron right here up 4% on the day, so Micron getting a little bit of a pump before earnings. PayPal up 1.83%. Where is Robinhood? Robinhood 23. There you go. Robinhood up 1.17%. Not bad. Doug says, if PayPal gets to 100, my worthless options might be only a 95% loss. Yeah, look, if you bought the Jan 2025's $140 strikes, I know a lot of people got into that one. Those aren't going to make any money, but you know, at least it would be nice to look at it at $100. I think the problem is so many people were early on PayPal. Like people were early in July of 2023 on PayPal. But the problem is the strikes were so aggressive for Jan 2025. This goes back to our conversation that we're having on the show around buying leaps, right? Like if you bought Palantir leaps at $30 strike or $20 strike or $15 strike when it was $6-7, it was an aggressive price strike because you needed a double, but it's obviously worked out really well. On PayPal, you needed a little bit more than a double, but it was so undervalued. People thought that more than a double would happen. It's just even 2.5 years wasn't enough to make it play out. But maybe into 2027, you know, PayPal really gets that momentum, and that's when the options will be worth more. Palantir right here, 36.88. GameStop down about 1.3%. S&P 568. Where's small caps on the day? IWM is green. That's nice. About 4 days in a row, we've seen green on IWM, kind of confirming the small cap potentially rotation that we are getting into a bit more. Tesla's at 245. Wow, Tesla's at 246. Holy crap. The last time we saw this was July 18th. Wow, dude. Talk about, I mean, dude, remember 235 on September 6th? We hit it in the morning and then the jobs report came out and then it fell to 208. So like people have been waiting to get back to these levels again, and the market's getting excited. The market's finally getting excited for this 10-10 event. Where's SoFi? Is SoFi holding on? SoFi, $8. Goodness. Why is SoFi struggling a bit here? I don't know, dude. The rate cuts are bullish for SoFi. We know that the rate cuts are bullish for SoFi. So that is a little weird to me that SoFi is having some issues in this range. I don't know. I think we know the next earnings are going to be really good, and I think we're going to see more momentum. Maybe the market wants to see Q4 guidance. Oh, look at Palantir, right back to 37. Wow. Look at Palantir. When did that happen? That must have happened in it was 36.80 like 2 seconds ago. Holy crap. Talk about a reversal. But yeah, I think the market wants to see SoFi actually show like earnings growth before they give them momentum. Look at Robinhood too, 23.14. Look at that. Robinhood and Palantir, my best friends. They're taking off a little bit. Palantir right back into that $37 range. It looks sexy at 37 too, doesn't it? It looks sexy at 37. And then Robinhood right here in the 23s. Not bad. Not bad. S&P 568. What else do we have? Bank of America's up. Let's look at the semis today. Let's look at the semis. The semis are flattish. SMCI's down. NVIDIA's up a little bit. Marvell's down. TSM's down. Micron's kind of leading the way, up 4%. Dell is down. Broadcom is down. Qualcomm is down. TSM is down. They're all basically flat. They're not really down, but they are flat. What else? Did Jeremy sell Tesla? Yes. Jeremy also bought Google, from what I understand. So Jeremy sold Tesla, not all of it, but he sold some Tesla, and then he bought some Google. Do you guys like that move? Sell Tesla to buy Google? Who likes that move right now? Put a W in the chat if you like that move. Sell Tesla, buy Google. Sell Tesla at, call it 235, I think is when he sold it. Buy Google at 165. Is that a W or is that an L? Well, we know I'm Beneficial loves that because this guy's loaded up the ass on Google. So he loves that move. Bay Ray says, I absolutely hate it. He didn't sell Palantir. That was a clickbait video. He actually titled the video Selling Palantir and then just read my tweet for 20 minutes on my thoughts on Alex Karp selling Palantir. So he did not sell Palantir. LLL. We actually have a decent amount of W's. We have a decent amount of people saying Google over Tesla is a W. There's actually more W's than I thought. All right, so some people thinking Tesla is a little bit of a sell here. The problem with Tesla, wow, it hit 247 just a second ago. The problem with Tesla is that if they don't show anything really interesting, oh my God, Palantir, 37.15. Holy shit, dude. It is 7 cents away from going back to green. If Tesla does not show any real progress, and when I mean progress, I mean like, hey, we are going to unveil this robotaxi on January the 7th at Las Vegas or blah, blah, blah. Like a real plan of action. I think Wall Street doesn't have any numbers they can use to calculate the future trajectory of growth, which means they can't really give them a new price target. If Elon gets on the stage and says, not only are all these announcements amazing, but in the next 4 months on this date at this location, you will be able to open up your phone and call a robotaxi, then I think the street's going to be like, oh my God, take our money right now. I really think it's going to be that binary. It's either Elon shows off a real plan, not just like a picture of the robotaxi, or it can't be Cybertruck where in 2019 they show it off, they have some fun, they crack a window, and then for 5 years we don't hear about it. If that's the case, I think this is going to sell off badly. If that's not the case, and we're in a new era for Tesla, I think it's going to 300. But we got to see if that actually plays out. Gene says, I don't understand selling Tesla right after getting the 50 basis point rate cut. Yeah, that's another reason I didn't really love Jeremy sell on Tesla. His argument was that the valuation doesn't match the growth, which is fair. But again, has the valuation ever matched the growth for Tesla? Like, it's always been a narrative and a story. And now it finally feels like that story is coming true. And that's where we're going to get some momentum. Look at Palantir going green. 37.36. Oh my God, dude. Like, I think we found a stock that just doesn't go down, guys. I think we found a stock. I'm kidding here, but goodness gracious, bro. Holy shit. At $38, the resistance now is 4,000 shares. There's no wall. The volume's kind of low as at 10 million. Usually we have like 15 million by now. Volume's a little low today. I can't believe I'm saying it's a little low at 10 million shares, but still, comparatively, it's low. But $38 is where the next resistance is, and it's not even resistance at 5,000 shares. It's really just waiting to be taken over if the volume picks up. Wow, dude. Talk about a reversal. Again, as soon as it dumped to 36.70 in the morning, I said, well, we've seen this happen many times. Every time it Every time it dumps down, it just kind of reverses. And so we'll see if that ends up playing out. Where's Intel? Intel right here, 22.12. That's up 1.28% of the day. Robinhood 23.13. Tesla 246. Micron again up 3.38% on the day. Alibaba 89, and then Google right here at 164.91. Wait until 10:30 a.m. Yeah, well, we also have to wait. We got ISM data in 4 minutes, so that's going to affect the market. So we'll see how that comes out. But at 10:30, also, if we survive that, then that might not be the worst thing in the world either. Tesla and Palantir to the moon. I put out a tweet on Friday and I said maybe Tesla and Palantir are going to be the best two stock portfolios of all time. I'm curious how many people agree with it. This was the tweet right here. I said, in the end, Palantir and Tesla simply might be the best two stock portfolio of all time. Put in the chat if you agree with that or if you think there's a better two stock portfolio. Let's assume 10 years out from these prices. There's some people had some good responses in the comments, but if you had to pick a two stock portfolio 10 years from now, I don't know, dude. I don't know if it's crazy to say Palantir and Tesla. I know there's a lot of people that throw NVIDIA there and MicroStrategy and all this. I get it, but like just two fundamental companies that aren't super cyclical like NVIDIA or super volatile like a Bitcoin proxy, if it's just Palantir and Tesla, maybe that ends up being the best two stock portfolio. And then for me, at least, I put in Robinhood there as well. That's the trifecta. Robinhood's wealth transfer, Palantir's enterprise AI plus defending the West, Tesla's FSD and robotics. And that is what I think my portfolio is probably going to look like. I've got 2 out of 3 built out, but I think it'll be those 3 over the next decade as well as like cornerstones of the portfolio. Another thing right here, Palantir officially is on the S&P 500 charts. So if you go to any S&P 500 chart and try to look at the tickers inside of it, there you go. Technology services. You have Oracle, Netflix, Salesforce, Meta, Microsoft, Google, Adobe, ServiceNow, Intuit, ADP, Accenture, IBM, and right there in the corner, you've got Palantir officially. You've got Palantir officially. It's not bad, dude. It's not bad at all. It's pretty damn exciting. Google right here at 165, Robinhood 23.21. Look at Palantir 37.34. Wow. Unbelievable strength on Palantir. Absolutely incredible. SoFi at 806, Google at 164, Intel at 22.50. We got ISM data in 2 minutes, folks. So we'll take a look at that and we'll see if that affects the broader market. All right. What do you guys say in the chat? Tesla, Rocket Lab, Palantir. I don't hate that. NVIDIA, Tesla. I don't hate that either. But I do like having Palantir in there. Rocket Lab and Palantir. Tesla, NVIDIA. Some people were saying MicroStrategy and NVIDIA, which is fair. I mean, look, if Bitcoin outperforms, MicroStrategy is going to outperform everything. MicroStrategy is going to absolutely outperform everything, and Saylor is going to be right. It's just basically you're going long Bitcoin at that point. See if that happens. This is MicroStrategy stock performance over the past 4 years. So as you can see, MSTR up 1,000%. NVIDIA is the only one that matches it, even kind of close. And then everything else is up about 300%. A lot of these names, top performing stocks in the past 4 years, a lot of them are not Mag 7. Howmet, Broadcom, Marathon, Petroleum, United Rentals, Quanta Services, Arista Networks. NVIDIA is the only one out of the Mag 7 on this list, to be honest. So there have been plenty of opportunities the past 4 years outside of just the Mag 7. Palantir, Tesla, CrowdStrike. I like that. I like that they're all founders, and I like that they're all executing against the vision. Same thing with Robinhood. They're all founders. George Kurtz founder as well. So I like those together. All right, PMI should be out right now. Let's take a look at PMI. What do we have on PMI? We should be getting it literally right now. We'll see how the street reacts. PMI. Okay, so where's PMI right here? Where is it? Oh, here it is. Okay, so market expected 54.3. We came in at 54.4 on the composite PMI. Market expected 48.5. We came in at 47. That's a miss on service or manufacturing. And then market expected on services 55.3. We came in at 55.4. So we beat on services. We beat on the composite. We missed on manufacturing. Is the market tanking because of this? Is the market tanking? We do have a red candle. Palantir 37.40. Well, Palantir doesn't care. Palantir doesn't care. Robinhood doesn't care. The broader market kind of red, might go down, might go red. It's up 0.05%. But Palantir right here, it was at 37.47. Now it's at 37.34. So it got rejected at 37.47, but still green on the day. Robinhood right here, 23.14. Yeah, market, there's a red candle right there, but individual stocks not being hit too badly. So we missed on manufacturing. Is that super bad? I mean, that is bad. 47 is a hell of a miss. The market wanted 48.5, so it's 1.5 down. It does mean that manufacturing is slowing down. Let's get some coverage on that. I don't know if that matters as much as services, but it is a miss. It is indeed a little bit of a miss. All right, let's get some coverage on that and see what we're thinking. Then we'll get back into equities.
Is this idea that they're just not going to be able to compete long term with either, but some of them are above 50. Let's look at S&P Global. On the manufacturing PMI, 47.0. We're expecting a number well over 48. In the rearview mirror, 47.9. This is the weakest since June of last year. Now, if we look at the services.
That's another reason the Fed cut by 50 bips. They want more people to borrow more money so they can do more manufacturing. So this right here, again, for anyone who said they should have done 25, it seems like we definitely needed 50.
It is above 50, 55.4, but it's still the weakest since, well, just July of this year. And if we look at the composite, 54.4, same scenario. It's over 50, but it's the softest since July of this year as well. So 2 out of 3 are above 50. Services, of course, pushing up the composite. And similar to Europe, manufacturing not doing well. Think Germany here. And some highlights to keep and pay attention to. We do.
All right, so I mean, broader market doesn't care too much. Where's the S&P? Are we still red? No, we're still green. We're still holding on green. We had a red candle, then we went green. And I don't think we officially went red. Wow, S&P almost at 569. So market doesn't care too much about that. I think also the market thinks, well, the Fed did what they needed to do. They needed to cut rates in order to encourage more spend from companies that do manufacturing. So it's not like the Fed could have done anything else. And so as more rates come down, hopefully that's going to be better for manufacturing. But that is a miss, even if services is a beat as well. Where is Tesla? Where is Tesla? Wow, Tesla 247. Holy crap, folks. Tesla, Robinhood, and Palantir are showing some major strength today. And they're going pretty damn green. Where is NVIDIA in the midst of all of this? NVIDIA is up 0.5%, which is not bad, but Robinhood at 23.17, Palantir at 37.30, and then Tesla at 247, maybe trying to go for 250. I mean, what a morning. What a morning for these three. Not bad. Not bad at all. FF says, if you had a child and a custodial account set up, what would your top 5 stocks be? Palantir, NVIDIA, Tesla, Microsoft, Apple for my son. I'll let the chat answer that as well. I mean, I can't disagree with those 5. I would put Robinhood in there, but Robinhood's a bit more risky. And, I think because it's your child has a long time to grow. So I think Robinhood will be like the next generation Schwab. That's why I like Robinhood, but I can't argue with Palantir, NVIDIA, Tesla, Microsoft, Apple. I also might just, even put an index fund in there just to get some general safety, just put the Qs in there, because then you get to go long tech without having to worry if, any of the tech stocks have a couple bad years. But yeah, I think I was talking with a friend over the weekend, and ironically, it's so funny you bring this up. I was talking to a friend over the weekend. He has 3 kids, and he has been buying QQQ for his 3 kids for the past 5 years. And basically, he was just like, I don't see a world in which tech does not play a major part over the next 10 years. And so just going long tech to me is not the worst thing in the world either. And that might be a better DCA than the S&P 500. Palantir, wow, 37.40. So Palantir continuously trying to break that 37.50 angle if we can try to get there. Let me see where the resistance is. It gets tough at 37.40, gets all the way back down to 37.30s, but it's tested it many times, at least 4 or 5 times in the past 30 minutes. $38 is still just 5,000 shares. It's not a lot of shares. 5,234. Look at this chart right here on the bid and the ask. I mean, oh no, we just got a wall. We just got a massive wall. I was just about to show you guys, and then we got a wall. Where is this wall? Yeah, right. 37.50, 57,000 shares. So I was going to show you this chart, and you see this red wall that's right there? That wasn't there. And it was like massive green and like barely any selling. So there was just like a lot of buyers at every level. And then right when I was about to show you this chart, this wall pops up right here. This wall is 50,000 shares at 37.50. So someone just put in a massive order to sell a decent amount at 37.50. 57,000 shares right there. You can see if we break through 37.50, we're going to 38 today. If we break through 37.50, we are going to 38. Like if we can break through that wall, we're going to have some fun. But we got to see if we can break through that wall. S&P 568, Intel 22, Google 165, SoFi below 8. Oh my goodness, bro. What the heck is going on with this one? If anyone has any theories on why they think SoFi is down, please put it in the chat. Like I'm over here debating, hey, is buying a SoFi call for 2026 worth it? And I don't know, dude. I feel like the rate cuts are so bullish for them. I know they're 18% short, but I think the shorts will eventually have to cover. And I'm kind of thinking, hey, if SoFi is double digits in a year, it's kind of stupid to not buy calls on them because it's a bit more asymmetric in terms of the upside. But I don't know, man. I really don't trust their tech. I given the competitors, I don't trust their tech, but I do trust their lending business. Their personal origination, their original loan business for personal loans is phenomenal. It's spectacular. And they pivoted the business amazingly from student loans over the past 5 years. So I have a lot of trust in management. I don't have trust in their innovation, but that's okay because you don't need to buy for the innovation. You could buy just for the bank itself. But I don't know why it's not holding on after 50 bips. I'm really confused with why that's not happening. Amit, you just got to be patient. Well, here's the thing. If you look at SoFi's chart over the past 3 years, it's been stuck in this 6 to 8 range. That's another reason why I'm thinking maybe calls for 2026 isn't horrible because eventually it breaks out, right? Like eventually you break out of that range, especially if you're a good quality company, like you break out of that range and then there's a lot of price discovery. There's a lot of upside. There's a lot of FOMO. There's a lot of momentum. That's where, I don't think you can buy calls on any stock in this market right now because all the calls are going to be overpriced. The only one that looks reasonably cheap to me are SoFi calls because SoFi has been stuck in single digits for the past couple of years. So that's why it's catching my attention, but I don't know if another 50 bips are really going to get the stock to move, even if it helps the business itself. But overall, we'll see. Maybe it's just red on a random Monday, and we're getting some people taking profits. S&P at 568, Nvidia's at 166. Where's Palantir? Palantir still at 37.30. That wall is more crooked than Amit's. That's funny. Some of you guys said that's a real brick wall. That's also very funny. Eric says it's just a bank. I agree. It is just a bank, but I do feel like 12 or 15 is a little bit more fair value for the bank, just given the rate of growth that they're putting out. But I don't know. It's weird, dude. The only way I'll explain why it's below $8 right now is because of manipulation, because of the shorts. The shorts have had so much fun with this stock, and I don't think they're going to be afraid if Anthony Noto has a great quarter. Part of me thinks, oh my God, they're going to be scared. They're going to cover. The other part of me is like, will they actually be scared and cover? And if they're not going to cover, this is what Palantir doesn't have to deal with. Palantir, because this is why a leader like Karp matters. Karp went on TV 37.33 and said the shorts are high on coke. Palantir volume 15 million right now. And the shorts said, you know what? We're not going to fuck with this guy. We're going to leave him alone. He said we're high on cocaine. This guy's fucking crazy. We're going to move on. And so that's why Palantir's short float is literally 2%. Palantir does not have to be worried about manipulation by the shorts. Anthony Noto has not called the shorts cokeheads. And I wish he would, because if he would, maybe the shorts would get scared. But they're not scared right now. This is the Palantir short float, 2.74%. I mean, talk about one of the most exceptional positions to be in. You've got Wall Street starting to love your stock. AI is taking over. Retail is in love with the CEO. Like, they just can't get enough of him. And then you've got the shorts that are basically like, you know what? We're just not touching this thing. I mean, and then you're approaching levels at that 38, 39, 40 range that we haven't seen for 4 years, which means price discovery is all but likely if we break through the $38 range. You can't ask for a better setup for Palantir. You just can't. But the opposite's going on with SoFi, where you just don't really have that much tech and innovation growth. You don't have a thematic attached to it. And then you also don't have the shorts that are afraid. And so I think that's the divergence going on. Where's Meta right now? Meta, wow, 570 on Meta. Is Tesla above 250 yet? Tesla 247. It's trying. It hit 247.97. It is trying to get to 250. Let's see. Tyler says it's good for SoFi to be short because then there'll be a better epic squeeze. That's another reason I'm thinking that's like SoFi gets to double digits easily in 2025. But I don't know. The squeeze might end up being massively epic, or the squeeze could not happen because the shorts don't give it up. So I think we're going to have to see definitely after Q3's guidance for Q4 to see how that plays out. Meta's at 571, folks. Meta's hitting a 52-week high and a all-time high, 1.44 trillion. Where's Google? Google's at 164. NVIDIA not really keeping up with the rest of the names. NVIDIA's kind of flat on the day at 116. And then you got Tesla right here at 247. So Tesla, Meta, Hood, and Palantir today. Just an incredible day. That's another Max 7 I wouldn't mind going long on. So Tesla, Palantir, Hood is I think a reasonable portfolio over the next decade. I think putting Meta in the mix is not crazy. I think there's a couple reasons for that. Number one, the cyclicality of NVIDIA risk isn't there. Number two, Google's search business, you could argue, is going to be under trouble. Meta doesn't have that same problem. Number three, Meta's Llama, you could argue, is catching up with GPT. So there's a tailwind there. And then number four, I don't see people not using Instagram, WhatsApp, and Facebook over the next decade. I don't use Facebook anymore. I do use Instagram occasionally, and I do use WhatsApp. I think those three products will grow more as 4 billion people come online. Even if, the average Americans is done with Facebook and Instagram, I think the average person in Kenya that just gets access to all their friends on a social network, they're going to be excited about it like we were back in 2009. So I think there's going to be a lot of people coming online. That's another bullish case for Google and YouTube as well. A lot of people are going to want to watch videos. And so there's going to be more momentum on the internet in general. And for advertisers, that's going to be the easiest place to go to. And so Meta, going long on that from that perspective, seems like it's not the worst idea either. Where's Disney? We haven't looked at Disney in a bit. Disney 92.30. My bearish thesis on Disney has always been, I think the content's kind of dying out. And I just don't think Mickey Mouse is going to be as relevant in the next 10 years. And maybe I'm wrong, but I mean, realistically, do we think Mickey Mouse and Winnie the Pooh and all these, are they going to really be relevant characters over the next 10, 20 years? And also, Bob Iger told us he's retiring in 2026. We saw the last time he retired what happened. Bob Iger is the guy who has, made Disney what it is. I don't know who they're going to pick outside of Iger. Nike and Starbucks went up when they got rid of their CEOs. I think Disney's going to go down when Bob Iger steps down, unless they have a phenomenal guy to match him after. So that's why going Disney long is a little tough. Amit, you should be the roaring kitty of SoFi. So first of all, that's Tanner's position. Tanner's going to be, whenever SoFi squeezes, you're going to see Tanner put on the bandana and become a roaring kitty of SoFi. But in general, dude, the shorts are just they're taking over this stock. And once those shorts squeeze, I think it'll have momentum. But you got to get the shorts out of this stock. They got to go find something else to manipulate. Tesla right here, 247. Intel 22 up 2%. S&P still holding green. Google at 165. IWM 222. So the PMI data really did not freak out the markets. We got to wait till the 1030 slam happens. We'll see if that hurts anything. Apple recovering a little bit. Apple was down 1%. Now it's down 0.5%. Shopify, $80. Someone asked me the other day, can Shopify become a $1 trillion company? What do you guys think? Can Shopify become a $1 trillion company? Shopify right now is 102 billion. So can Shopify 10x? Let's call it over the next decade. I don't know. I feel like e-commerce is not going anywhere, but a 10x on Shopify seems aggressive. You would need a lot of the world to move over to e-commerce. The TAM would just have to become massive in terms of e-commerce versus regular commerce. CrowdStrike right here at 297. That's down a little bit on the day. Bitcoin still holding 63. That's bullish. And you got Nike right here at 85. What is the short float on Celsius? Let me see how Celsius has been performing. Maybe the shorts should leave SoFi and go to Celsius. Maybe they can find something there. Celsius short flow is 13%, almost similar to SoFi. SoFi's is at 18%. Celsius right here, 33.35, up about 0.5% right now. So we got Celsius right here up a little bit, and then CrowdStrike down a little bit as well. Doug says with Benioff shilling it everywhere, it might take it to 1 trillion. Where is Salesforce today? Salesforce 265. We will have Dan Ives on CNBC this hour. We'll get his thoughts on Apple. Salesforce 265. Look, Benioff took Salesforce from 212 to 265 this week. Or not this week, this year. After it collapsed on the last earnings. Bill says Shopify is an annoying platform, but it enables creators with the supposed influx of global South makers coming online if they can position themselves there well. Yeah, I mean, look, that's fair. The only thing about the creators, like if I started a merch store or something, it's really hard to do that, even if you're a creator, because you have to have like an audience that cares. Wow, Palantir above 30. Oh my God, hold on. Did we just break 3750? Remember I said there was 40,000 shares waiting? Holy shit, we broke the wall. We broke the wall. Oh my God, we broke the 3750. Look at this picture now. Look at this picture. You see all the green? That's the amount of sell side pressure versus the red. The next like legit wall. Holy crap, we just broke 30. Someone bought 50,000 shares at 3750. 57,000 shares, actually. The next wall is at 3820, not even 38. Dude, holy shit, bro. Holy crap. Oh my God. Oh my goodness. Anyway, as I was saying on Shopify, you have to have like a community that really supports you. And I think for most creators, it's hard to build that out, which is why they end up doing paid ads, right? So even if there's a lot of creators, for them to have real meaningful audiences to then sell via Shopify, that's just a little tougher. So Shopify can't help them with that, because they don't have their own social platform. Now, maybe if Shopify created a social platform, that could be a way. I mean, if Shopify just like had a TikTok version of Shopify where you could just swipe and then buy items, I think that would be super bullish. But they don't have that, right? They're not in that game. So they've got to find a way to integrate with creators to make it easier. Wow, 3760 on Palantir. Holy shit, dude. Goodness gracious. This is incredible. Wow. Okay, so I mean, do we go for 38? I mean, I feel like the momentum's there. I feel like fuck it, dude. Let's go for 38. At 37.86, there's 10,000 shares. That'll be easy to break through if we get there. Fuck it, bro. Let's do it. This is the part of the stream where I've been very conservative on valuation and all that stuff, right? I like make sure to be pretty cautious and not sound delusional. But when we're running, it's fuck it. It's fucking mode. It's fucking emit mode. It's like, I don't care. Now let's go to 38. Does 38 make sense? Nope. But I don't care because now we're having fun, baby. Now we get to enjoy. Now we get to just enjoy the the excitement of being so damn early in this name and Wall Street figuring it out. So here we go. Lee Allison said it's been a long year of abuse predicting Palantir at $40 this year. Very close to vindication. I will give a shout out to Lee. Lee's been in the chat for the past basically 7 months saying 40, 40, 40, 40. When it was 27, she said 40. When it was 23, she said 40. I mean, Lee, maybe you're right. Maybe you're right. Maybe it ends up going 240. Timecone says sell the double top, take your cost basis out. Maybe it's a double top, who knows? But I mean, it's getting some momentum, man. Breaking 3750, dude. Someone bought, what's the math on that? 57,000 times 37.5. Someone bought 2.1 million of Palantir at that wall, and either it was a collective group of people or it was one person, but they didn't care. They tore down that wall. Robinhood at 2308, and Bitcoin still 63,243. Where's Tesla? Tesla 246. Tesla, I mean, dude, a close above 245 on Tesla would be bullish. 250 run would be really bullish, but a close above 245 I think would be super bullish as well. Bay Ray broke the wall with his purchase. Thank you, Bay Ray. We appreciate that. We appreciate that. That is nothing when considering the global interest in Palantir. Well, that's a good point, dude. Like, 37,000 or 50,000 shares sounds like a lot, but again, the interest in Palantir from a global perspective is just ramping up aggressively. Now, again, valuation. Look, it's a tough conversation to reconcile. Valuation's up there. It probably, doesn't make a lot of sense. But if this is a story beyond valuation, which we have seen happen many times, Tesla, Amazon, like Nvidia, these companies were. It was much more than just the PEs and the price of sales. There was something deeper. That's kind of what we all have been thinking for 3 years, right? I mean, you have to be kind of stupid to buy it at 8 if you didn't think there was something deeper than the shitty numbers, which at the time were very shitty numbers. And so maybe that thesis is kind of beginning to play out on a global scale. And if OpenAI is worth 150 billion and they make no profits, Palantir at 80 billion making 7 quarters worth of profits, maybe that matters. Maybe that really matters. So that's what we got. That's what we got with Palantir. SMCI is up 5%. Wow, that's a reversal. SMCI was down 2%. Where did that come from? Okay, did the semis all reverse at once? Pretty much. Only Marvell that's down 4%. Why is that down 4%? That's weird. They didn't have earnings or anything. Let me see if there's any news on that one. That's weird. That's a big move on that one. Is there any news on that? Did they get downgraded? No news. That's weird. Okay, so that's down 4%. Qualcomm's down a third, and then Broadcom's down 1.2. Those are normal moves, so that's not too crazy. Dell's basically flat. Micron's still up, but AMD's up, Nvidia's up, and SMCI. What? No, there has to be news on SMCI. There's no way it's pumping 5%. What's the news on SMCI? There's no way it's pumping 5% like that. Is there any news? That's weird, dude. Why is it pumping 5%? SMCI. No, there's no news either. Okay, I guess there's just money moving around in the markets. That's what you got. Palantir 37.46. Meta, wow, 5.72. Holy shit, dude. Meta, I don't think there's any news, but Meta, people are just getting. See, so one thing that might be happening with Meta is I think people are taking money out of their money market funds, and they're looking at the Mag 7, and they're saying, hey, which one it has the most potential for the next 6 months, and which one am I comfortable going long on? And Meta is being the beneficiary of that. That's one theory I have on why Meta's pumping. There's no like fundamental news. They have an event coming up tomorrow or on Wednesday, the Meta Connect event. Maybe that's the reason they're getting a pre-event pump. But in general, the Mag 7 might be the flight to safety that a lot of capital starts to go to as they exit their high yield savings accounts. And that means QQQ also should get a bid. It's up about 28 bips right now. S&P at 569. Palantir at 37.50. Back to 37.5. Second time cracking that level. Raymond James downgrades Palantir from outperform to market perform. Yeah, so we talked about that this morning. Is relatively reasonable. He said, hey, the valuation's up there. Palantir just needs to grow into it. So he's not lowering the price target. He's just lowering the overall performance of it, which is fair. But Palantir doesn't care. Palantir does not care. SMCI will have a stock split. It was supposed to happen by now, right? I guess it happens end of September. It's going to be 10 for 1. So it'll be trading at $48 pretty soon. I thought it was supposed to happen in August, to be honest. But yeah, it'll be happening soon. SMCI will be $48 if it holds this 480 level, probably by end of September. Now, when they announced the split, they were close to $700. So it has gone down since that split. Time Cone says, sold 50% of my Palantir 23.51 cost basis. Congrats. Not bad. Took a nice profit. 23.50 to 37. That's up, what, 70% or something? Let's do the math. 37.5 minus 23.5. That is a 59% gain. That's not bad. Congrats on the profits. It's what this game is about sometimes, taking some profits and being able to allocate that capital in a different place. And look, if this is the top, you might have a chance to buy back in. I don't know if we hit 23 again. We'll see. But if it's not the top, then maybe we just keep going further. Where's Hood? Where's Hood? Where's Hood? 23.18 on Hood. Not bad. I think that October event coming up is going to be really exciting. I talked to a lot of people over the weekend. There's a lot of money coming into Hood for deposits, dude. There's a lot. There's a lot, dude. I talked to a decent amount of people this weekend. They're bringing in money. I'm talking about millions and millions and millions of dollars. So I think deposits should be good. Remember, I calculated a 20% decline in all categories on Hood's trading metrics, and they still have a 40% growth quarter because last quarter they had 467 million in Q3 2023. This quarter, I'm estimating 650-ish million. So I think they're going to be good as long as we avoid a recession. The macro holds up. Hood is going to have a good quarter, and I think they're going to be. I think 25 end of year is very reasonable. So we'll see, but deposits are starting to come in for September. S&P at 569. Tesla, wow, 248. All right, so now Tesla testing 248 again, $2 away from that 250 level, and you got Palantir at 37.50. Maybe Palantir 38 and Tesla 250 are on the books today. Maybe that's what we're looking for. Maybe that's how we're looking for. Amit, did you watch the last SoFi Weekly where the guy talked about how insiders at SoFi talk about Robinhood all the time? I did not, but I guess you're describing that someone said insiders at SoFi talk about Robinhood. Well, we kind of knew that, right? We saw Noto told Vlad to kind of stay in his lane in that interview with Cathie Wood. I thought that was interesting the way he said that. But yeah, I imagine they have to be looking at Robinhood's success. I mean, SoFi is literally launching SoFi Plus or whatever Noto said in the conference at Goldman a couple weeks ago, which is going to be their subscription offering. And as soon as I heard that, I remember listening to it and I was like, it sounds like they're going after Robinhood Gold. And I think objectively, even if you're not a Robinhood investor, you can agree Robinhood Gold is one of the craziest subscriptions ever. I mean, it's basically an Amazon Prime for finance. And then Noto used the word Amazon Prime as well. I was like, okay, now he's just stealing Vlad's vocabulary. And now I was like, Vlad told me it was like Amazon Prime in the podcast that I interviewed him in. So I recognize those words. And they've executed against that, dude. They've got 2 million members. Palantir right here, 37.64. So if SoFi launches something like that, SoFi below $8 right now, they're really going to have to make it value packed. And, one of the things Noto mentions is, members will be able to invest in alternative assets. And I was like, what the fuck? I was like, who the fuck? Like, who pays $5 a month to invest in art? That is not getting your money right, bro. This is why I'm so skeptical of whoever's running tech at SoFi. I don't think they understand consumer tech. I really don't. But I think they're really good at banking. And that's why I think man, I don't think this thing's gonna be stuck at $8. But it's just so hard for me to, otherwise I would have bought call options for 2026 by now if I had faith in the tech. I just don't, dude. I really don't. And every bull I talk to, they can't justify the SoFi app experience. The fact that there's you can't even sell calls and puts on the app yet. Part of getting your money right is being able to collect premium from the shares you have on a brokerage. A lot more people are realizing, hey, they don't just have to buy and hold forever. And the fact that SoFi has not introduced that yet, I mean, it's unbelievable to me. So that's my bearish take on their tech. But overall, I don't think they have to be stuck at $8. And so I think the shorts eventually will capitulate. Lending will grow, and this thing's closer to 12.15, but it might just take a few months to get there. Or it might happen so rapidly after it breaks through $10 and it just zooms all the way to 20. I think that's also very possible. I really think that's possible. I just think you got to get the shorts to get out of the way, and you got to get rate cuts to come in, and then there's a shot that it could have that type of momentum as well. Salesforce at 266, Tesla 247, Nvidia 116, Meta 571, S&P still 569, and you got Intel right here at 2241 on the day. Microsoft's going green. Yeah, we got a green day. We still have 10:30 to look forward to, so we got 27 minutes. Microsoft now edging towards that green level. Palantir 37.53. Is Dan Ives on CNBC yet? Does he have anything to say yet about Apple? He has some thoughts on Apple. Okay, no, he's not on. He's not on yet. I think he'll be on a little bit. Let's get a little update from CNBC. Get some updates on the macro, then we'll go back. But we should be hearing from him soon and see what he thinks about Apple as well.
Most importantly, the PCE price numbers, which is the Fed's target for inflation, which could show another benign report showing the year-over-year inflation rate down to 2.3 or 2.2%, which, remember, the Fed wants to see it at 2%. So moving closer to target. We'll see if that happens. And then a number of earnings reports this week. We'll hear from Micron, for instance, in the semi space, Costco on the consumer. One thing I did want to mention, which seems to be having an impact, is that China overnight did surprise.
Goolsby speaking? Is he speaking right now live? Is he speaking live? He's not on CNBC. I knew Goolsby was speaking today. Is he speaking on Bloomberg or something? Oh, I would love to hear. I love Goolsby, dude. Goolsby's just an awesome guy. No, he's not on Bloomberg. Is he speaking publicly? Okay, we'll go back to CNBC. Let's see if I can find Goolsby. I would love to get his thoughts right now, too. 1 second. Okay, cool. Here we go. Here's some of the China news as well right now.
Essentially, and that's on social media in China. That's kind of how they're referring to things, because she's not going anywhere for now. And at this point, there doesn't seem to be hopes that there'll be policy that will reverse some of these trends in unemployment.
Which would be what? Significant stimulus that they don't seem willing to do, particularly sort of at the local level, to try and at least give some semblance of confidence to the property markets.
And on the demand side, just to stimulate the consumer, which they just refuse to do. It's always more supply side focused. They have such a high savings rate, though. They really do. I mean, they could.
In part because they don't have a social safety net that is that reliable.
Yeah, Larry Fink always talks about it.
Palantir just got a 2-year, $12 million deal with the National Institute of Health and the Office of the Assistant to the Secretary. I'm posting it on Twitter right now. You guys will see, but we just got $12 million for 2 years. Date signed 9/20. That was 2 days ago, 3 days ago. Date completion 2025. Oh, sorry, 2026. So 2024, 2026. 2 years, 12 million.
At
Yeah.
30% savings in China. So high rate there.
So they're relying on their exports to drive the economy, which of course then has an impact around the globe in terms of
Oversupply.
deflationary, as you pointed out.
Yeah, disinflationary, deflationary. But there is some excitement building today that maybe we'll get more on the policy side. Look, the Fed gave some room to other central banks when it went double on the rate cuts. The chart of the day for me comes from Citigroup and Nathan Sheets, their economics team, about where rates are going all over the world. Just a reminder that we are now in a period of coordinated central bank easing. So all the lines are the major central banks, and you can see how tight policy got, right? They all hiked together, and the U.S. is right there at the top of the list because we hiked the most. And then the dotted line shows where they are, or cities expecting those policy rates to go. And they are expecting the headline here is that for them to all come down, not all the way back down to zero, which is where we started right during COVID, but to come back down, and that should offer some support for economies. Is it enough to keep economies from going into recession and from stress in the labor markets? Perhaps in the US is the thinking, maybe not so much in Europe, where the fundamental backdrop has been a little bit worse. But that's the setup that we're looking at right now, which is a fundamentally different scenario than we have been in the past few years of tighter policy, right? It's theoretically.
Okay, so I don't know where Goolsby's speaking, but he said some bullish stuff. I knew he would. That's what I wanted to see. He probably said some bullish stuff. So a couple things. First of all, we got this good picture here by Bayray that he just tweeted. Palantir is officially number 129 in the S&P 500. So out of the 500 companies, we are ranked 129. Now that's also based on the stock. If the stock goes down, that could go down. Stock goes up, that could go up. But we are 129 in the S&P 500. So not bad. Second of all, we got a new $2 million deal just now from the National Institute of Health. So right there, you can see $12 million deal over 2 years with two different organizations. So we got that. And then we got Goolsby, who just said some stuff. And right there, many more rate cuts from Goolsby are likely needed over the next year. Rates need to come down significantly. I love Goolsby because Goolsby is the guy who wanted to cut in July. And he didn't have enough, momentum to get other people to believe that we should cut. But he wanted to. He knew it was time to cut. So he probably was instrumental in getting J-Powell to realize 50 is what's needed. J-Powell even admitted, hey, we probably should have done a cut in July if we had the jobs report for July. 3760 on Palantir. But that's bullish, folks. S&P is the S&P reacting to that. S&P 500, yep, up. Up right on that. We still have to deal with 1030. For those that don't know, 1030 is when the market falls off a cliff every single time for the past month. But 569 right there on the S&P. And you got Palantir 3759. The fact that Goolsby saying we need more cuts, it makes sense. It makes sense. It is time for us to cut and to bring rates down. It's just time. So I would imagine the market. Yeah, look at that. Look at that. S&P 570. Look at that. Now it's hitting. Now it's hitting those algos. Now it's hitting 570. I mean, again, dude, we get more cuts. I don't know how it's bearish. Tesla 247, Google 164, Q's 483, Hood 2326. Makes sense that Hood's pumping on that news as well. I would imagine Hood likes that news. And you got Palantir at 3756. Could you guys imagine a world in which Palantir kind of normalizes at 35 to 40? And let's say 2025 is flat. Let's say there's not too much movement and it's flat, but that's when the accumulation phase begins for Palantir. A lot of people thought accumulation was 21 to 25, which it was for a good 7 months in end of 2023, early 2024. What if accumulation now becomes 37 to 40 and legit it becomes a normalized stock in the high 30s? I mean, like, if that happens, bro, even if there's not that much upward movement, at least your gains aren't taken away, as it falls back into like the mid 20s, even if you don't expand the stock price over the next year by too much, right? Maybe it doesn't go up another 100% next year, but if it at least holds 40, a lot of people are up to 300%. At least they don't lose their gains. And to be honest, that would be a perfect situation to ride cover calls on, and you could collect a lot of premium next year if it kind of stays flat. But given its momentum, I think it's either going up or down. I mean, like from a violent perspective, like I don't think it's going to be flat next year. I think it either goes up another 30, 40% or it retraces heavily, because it's a name that has too much momentum, and it doesn't look like it's a name that wants to sit flat. But if it does, then, at least we get to hold these levels. After the hood event, will we finally stop seeing this awful Webull chart? We'll see. Vlad's got to come out with a good product. He's got to come out with a good product for me to switch. 570 on the S&P. Like, I'm not just going to switch because it's Vlad. That's my guy. I like him. Gave me a shout out on the Twitter Spaces he was at the other day. Super cool dude. He's helped my net worth increase a decent amount this year. But if the product sucks, I'm not going to use it, bro. I'm not just going to use it. So I hope they put out something good. And they could put out something good, but maybe it's not good enough to use on the stream. We'll see. I mean, we're going to have to this is going to be a community decision to decide if we like using them over Webull. But we will see. One thing I will say, though, for people that have their money in Webull, a lot of people don't know Webull is a Chinese company. So when your money's in Webull, it's just one of those things to remember, dude. Like, if anything gets fucked in China and Webull ends up going out of business or anything, I would be much more comfortable having my money in Robinhood versus my money in Webull. Now, Webull for trading, not the worst thing in the world, but I don't know. It just doesn't make me feel the most comfortable having money inside of like a Chinese company. Would I do it for Carp? Could you imagine Palantir puts out a brokerage app? I would be the most decked out brokerage app because they care so much about design and stuff. That would probably be pretty cool. Tesla 247, Meta 571, Nvidia 116. All right, let's go back to CNBC. Let's see what else we've got going on the headlines. Oh, we got some comments by Goolsby here. All right, so we got a little bit of analysis there. Let's check that out, and then we'll keep going.
From Chicago Fed President Goolsby speaking at the annual conference for the National Association of State Treasurers. Some of his key points today: the long-term view dictated that it was time for the Fed to act. He says that jobless rate at 4.2 is at a level many consider sustainable full employment, and adds that inflation is way down from the peak, adds that it's been coming in at target for multiple months, which kind of takes us back to what Waller said on Friday, too.
Less of a surprise coming from Goolsby, who's been leaning a little more dovish. Again, not a voter this year, will be next year. But, they all want a soft landing. I think they differ. Economists and investors differ on the right way to get there in terms of what level we ultimately settle at and how fast and how big the cuts are. But clearly, Goolsby is out here saying we can't be behind the curve if we want a soft landing. And that's what the action is about. Expect a lot more explanations from Fed members through the course of the week. As we head to break, here's our roadmap for the rest of the.
Yeah, I would expect a lot more people from the Fed start talking more about the need to cut rates and to get ahead of the curve. We got Dan Ives on CNBC. Let's get his thoughts as well. Now, here we go.
Officially going on sale this weekend. And our next guest says his channel checks are showing, quote, strong demand. Dan Ives, Wedbush Securities Managing Director of Equity Research, joins us now.
Hold on. We got Chad in the chat saying, Amit, if Palantir made a brokerage app, I would make sure the app would have your voiceover saying the stock goes green so you feel good about yourself. Chad, that would really make me happy. If we had a voice every time the stock goes up or down, if you just have an Amit playing green, red, green, red, green, red, that would be, I'd pay $20 a month for that. That'd be nice.
Now, he's got an outperform rating on Apple. Price target of 300. Has been super bullish about this phone and this whole cycle. Dan, I got a 16 over the weekend, but I was a little surprised that they had the inventory. They had it in stock last night here in the Oculus, the Brookfield Place store. Is that a sign of demand or?
Yeah, I think it's been depending on the stores, but everything we've seen, it's trending about 8 to 10 million ahead of iPhone 15 from a unit perspective. And that foots with everything we saw in Asia over the last few weeks when we were there. I think what you're really starting to see is just the reason this is going to be what I believe is an AI-driven super cycle with iPhone 16. Partially, like you, 300 million iPhones have not upgraded in 4+ years.
Yeah, mine was stale.
And then the next step, Apple Intelligence will start to get rolled out, a lot of the features into holiday season, and post-holiday season. I think that really is going to be, we think 20% of consumers worldwide will ultimately access AI through an Apple device.
Some of the reviews suggested that if you were really going to give a healthy diet of AI tools, you'd be giving more than, for example, 8 gigs of memory.
Sure.
Is that fair?
Oh yeah, I think for iPhone 17, they're going to have to step that up.
Really?
But I do think it's an iterative process. I mean, Apple, if you really think about it, they were definitely late to the game when it came to AI. You had to have the OpenAI partnership, ChatGPT. I think other partnerships will come along, but it comes down to that install base and the way that they're doing these upgrades. And I think you're going to see more and more marketing material rolled out into holiday season. And I think for Apple, this is the start of a renaissance of growth. Everything we see from Asia shows high single-digit, potentially double-digit unit growth coming out of iPhone 16. That happens, I think, going into early next year, we're looking at a $4 trillion market cap for Apple.
So do you think that they were just their shipping has become more effective and their inventory management has become effective, and that's the reason why people are able to get them?
Yeah, they've added about 10 to 12 million more units this year than a year ago. So they were prepared for that. Now, I think in terms of pre-ordering, because there was some noise about it last week in terms of, you look at pre-orders and that was down. So I actually disagree because you had essentially 10 to 12 million more units that were available. You actually look at lead times, everything we're seeing in Asia, I think it's tracking to what will ultimately be 240 million more units or more, which would be a historical record for Apple in a year in terms of iPhone units.
So you think channel supply checks leading into a cycle are getting less and less useful with every cycle?
Look, I think you have to understand, it's part of being in Asia 2 times in the last 6 weeks, that you have to be able to put all the pieces together. For me, just to go on the website and be like, okay, lead times, compare them, and then have some mathematical gymnastics, I think that just tells one part of the story. For us, it's about what suppliers are saying, what that looks like, what we believe the pent-up demand from an install base. You have 300 million iPhones haven't upgraded. You go back 2 years ago, that's 140 million. So that's almost more than doubled. And I think that's why when you look at Apple stock, I think investors are kind of looking through this to be like, what can incremental services revenue be? What ultimately does AI mean to Apple? We think $30 to $40 per share. And that's why I think some of the parts, this could be not just $4 trillion, I think this could be $4.5 trillion. We have a $300 price target. I think it just starts this, what I believe is a super cycle.
Now, I know this is a very smallly held view in terms of AI for Apple, but it also could, some believe, be a threat, an existential threat. I mean, these reports over the weekend that Johnny Ives working on a device with OpenAI. Sam Altman's quoted basically saying generative AI made it possible to create a new computing device because the technology can do more for users than traditional software. Is that anything that anyone in Apple should be worried about long term?
Look, I think they have to be concerned about just broader trends. But when you have what Cupertino has, 2.2 billion iOS devices, 1.5 billion iPhones, that is the key ingredient to their success. It's about that install base. And I think it's them further monetizing the install base. If we said a year ago that they'd have a partnership with OpenAI, you'd be like, no way, that's not Apple. Look what they did. So I think they are starting to change with the times. And I ultimately believe Google and others are going to have to integrate into iPhone 16 to iOS 18, because otherwise you're on the outside looking in of this AI consumer revolution.
Making the case for Apple again, Dan. Thank you very much for coming in off the new weekend for iPhone 16. Dan Ives.
Still to come this morning, we'll get.
Who's convinced, bro? Who's convinced? Did he make you more convinced that that Apple is going to be the AI behemoth that he says they're going to be? Palantir 3742, S&P 569. Where's Apple? Apple right here is at 227, basically flat on the day, basically 228. I don't know, dude. I feel like it's stupid to bet against Apple, but I don't think the upgrades are going to be that big. This is one of those things where I just don't have a position and it's whatever. If it goes up, great. It's good that it goes up, helps the sort of AI ecosystem. If it doesn't go up, then whatever. It is what it is. I don't think Apple is the market anymore. But again, there's so many people holding Apple for decades, bro. People have held Apple for so many years. It's one of those things where it's going to be hard to get someone who's been holding Apple stock since the iPhone came out to sell it. You know, it's just one of those things where the amount of cash they have, the amount of financial engineering they can do, worst case scenario, if they had to offer a dividend, like they're not letting this thing collapse. Now, Buffett doesn't feel the same. Buffett got rid of half a stake. Maybe Buffett got rid of more, dude. I mean, maybe we're going to find out in the next 30 days if Buffett got rid of more. But if he did get rid of more, then he's obviously done with the growth perspective or growth angle on Apple. But I don't know. I don't think Apple has to collapse if so many people are willingly still wanting to buy it. People hold Apple for a long time. Yes, that is correct. That is correct. Apple should have been spending money on AI instead of buying shares. Oh, speaking of Apple, dude, we got to talk about this story. So our boy Altman looks like he's coming up with a new device with Johnny Ive, who used to be the head designer at Apple. And here's what the Wall Street Journal reported. Mr. Ive and Mr. Altman met for dinner several more times before agreeing to build a product. They have raised money privately with Mr. Ive and Emerson Collective, Mr. Powell Jobs Company, contributing and could raise up to $1 billion in startup funding by the end of the year from tech investors. In February, Mr. Ive found an office space for the company. They spent $60 million on a 32,000 square foot building called the Little Fox Theater that backs up from the Love From courtyard. He was hired about 10 employees, including Tang Tan, who oversaw iPhone product development, and Evan Hankey, who succeeded Mr. Ive in leading design at Apple. This is like legit, bro. They're hiring legit people for this shit. On a Friday morning in late June, Mr. Tan and Mr. Hankey could be seen wheeling chairs between the Little Fox Theater and the nearby Love From studio. The chairs were topped by papers and cardboard boxes and the earliest ideas for a product that uses AI to create a computing experience that is less socially disruptive than the iPhone. Essentially, they want to build an open AI phone. Now, what's so interesting about this is that Tim Cook gave the keys to the kingdom, the keys to 2 billion devices, to Sam Altman. So Tim Cook went up to Sam Altman and he said, hey, we're going to incorporate GPT as the premier foundation model on these 2 billion devices. Cool. Then Sam Altman takes the lead designer of the iPhone, Johnny Ive, who retired a couple years ago, but he takes him, and now they're building their own OpenAI phone. So you've got a new OpenAI phone started by Sam Altman, while you've got the current OpenAI models integrated into the iPhone. It is just one of those things where he just doesn't care, bro. He like legit doesn't care. I mean, he's just, and Tim Cook can't stop him. What's Tim Cook going to do? He's going to be like, oh, we'll go to Gemini. It's like, no, you're not. You're not going to go to Gemini. Gemini sucks. Anthropic sucks in comparison to GPT 01, 4.0. I mean, the fact that GPT is putting out new models every couple months, like you're just not going to leave GPT. They're the winners here. That's why they're getting valued at 150 billion. Palantir right here at 37.30. So Tim Cook's got his hands tied. And to the comment for the person who said Apple should have been spending money on AI versus buying back shares, there's a legitimate argument that they should have been training their own models years ago for this moment. And they missed out on that because they were buying back stock. And they didn't care too much about, you know, the upcoming generative AI revolution. And so now they have to partner with OpenAI. It's a really interesting situation to be in. And I don't know. I don't know how Apple's going to fully navigate that. Along with the fact that we haven't heard an update on the Vision Pro. We don't know if the second version is coming out. Like Apple does a product update every year, right? They released the Vision Pro in July 2023. Last time I checked, it's September 2024. We are over a year since the Vision Pro launched, and there's no product update. That's unheard of for Apple, dude. They update the damn AirPods every year, and they add some stupid thing in the AirPods that make it better. They update the watch. I'm so like, I've never cared about the Apple Watch. I know a lot of people use it. I just like, I don't know. I don't wear watches in general, but like, I'm not a big watch guy, Apple Watch guy, but they find a way to upgrade that thing every year. So the fact that they didn't upgrade the Vision Pro also is like, wow. Seems like they're at least moving on from it potentially, or they need many years to figure out a new way to upgrade it. But that's what we got in the context of Apple. Benny says a lot of people don't trust Sam Altman, so the majority of the population aren't leaving the iPhone for his new phone. Yeah, I don't trust Sam Altman, so I wouldn't do that. But also, again, I just don't know what an AI device looks like. that is so unique for consumers. You know, there's got to be a really, really core value proposition. I think a lot of these AI devices have tried and they haven't really figured it out. Tesla at 248. Do we have any news on Tesla? Let's see. Let's see if we have any news on Tesla. I'm assuming some stuff has happened over the weekend. Okay, you know what we're gonna do? We're just gonna go through. We're gonna go through Sawyer's tweets and see what he says. Let's see what he has. So Joe Biden is preparing a ban on Chinese self-driving car technology amid fears vehicles could be piloted or disabled remotely on U.S. roads. Wow, that's bullish for Tesla. So there's not going to be any BYD or Neo FSD in the United States if Biden ends up banning. I think Trump would do the same. If Trump gets elected, Trump is not a fan of China. So I would imagine Trump is going to be putting on certain restrictions as well. So that's probably bullish for Tesla. Tesla will officially begin notifying winners of the Robotaxi unveiling event lottery ticket this week. Tesla said space will be extremely limited for the event. Let me know if you applied for the event in the chat. Let me know if you applied. And hopefully one of you guys in the chat ends up winning and you can send us some pictures and show us some details from that event. That would be cool. After 9 months of installations, nearly all of Hawaiian Airlines' U.S. mainland flights are now equipped with fast and free Wi-Fi courtesy of Starlink. That's incredible. I can't wait till that happens for United. That'll be amazing. Do we have any other Tesla news? Okay, we have a little clip from GM. Let's see what GM CEO has to say.
I believe, yes, I absolutely can. The legacy car makers move fast enough? I believe, yes, I absolutely believe, yes, we can. And I think, yes, we are. Our workforce is quite young. Most of our technical talent has been with the company less than 5 years. And so I would say for about 40%, they're joining because they want to be part of a company that is going to change and lead in the move to electric vehicles.
So too soon to ask you about your legacy is what I'm hearing.
Well, I think legacy is what someone else writes. I mean, I hope everybody knows I love this company. I believe in the team.
Bro, if you're 22 years old, graduated with like a comp sci degree, AI, masters or whatever, who the hell goes to work at GM? Like, how does that like that's like, I would imagine you only go to GM if you get rejected at Tesla. Like, there's no way a young person who's super smart is like, I'm going to change the world at General Motors. That's not happening, bro. It's like, I don't think that's happening. This also was some big news on Friday. We didn't talk about it on the market close, but rapper DaBaby, who has over 35 million monthly listeners, released his new album cover with a Cybertruck on his album cover. I mean, dude, that's kind of crazy, bro. Talk about the marketing. To put a Cybertruck in the cover of your rap album, and you got 35 million people a month listening to your stuff. I mean, it's that organic brand awareness, again, for Tesla, that's hard to get rid of. He's not going to be doing that on a GM car, is my point. Also, Kim Kardashian, dude, the amount of pictures she's taken with the Cybertruck, if you go through her Instagram, it's kind of insane. It kind of makes me feel like, is she getting paid to do that? Because like she's like legit taking a picture every other week with her Cybertruck. And either she loves that car or there's something there, but she has 360 million followers on Instagram as well. So the brand awareness of that thing is growing pretty rapidly. Car delinquencies are off the charts with people within their 600 credit score and 1,200 to 1,400 a month car payments. Yeah, I mean, look, that's fair as well. And we saw credit card delinquencies last night. I showed a chart. It's ramping up. Credit card delinquencies are not going down, kind of getting close to the 2008 level. So that's one thing to be a little worried about. But again, I think that's why the Fed cut by 50 bips. That's why Goolsbee and Kashkari are saying that, hey, it's time to keep cutting even further because they see that it is time to finally begin loosening up policy. Let's get an update on Nike, see if there's any momentum there, and then we'll keep going.
And it is a recognition by the board that they have to go back to the core, what has worked, the culture, going back to focusing on retail relationships. Why did you open a negative catalyst watch?
Yeah, I think you laid it out well, meaning the return is well received. And I think the need for change was very much paramount here. I think for us, going back to the old, it's really a returning to the old guard. And it's not just Elliott. They've brought back 3 different executives with more than 25 years of experience at Nike prior to 2020. So we're encouraged by that potential change. I think the timeline might just take longer than many anticipate. And to your point, that created the catalyst in terms of where we stand today. You have issues with innovation. You have issues on the wholesale front. It's very competitive, particularly in the last 2 years in terms of the backdrop that created where we stand today. So we lowered numbers for the quarter. We see a cut for the year. I think street numbers for next year are too high. They're embedding a return to industry growth. I think that's more of a 2027 type of a playbook.
Yeah, because the company reports earnings next week before even the CEO turnover. There's also this investor day that they were planning to hold in November. Not sure what the deal is on that, but
Nike needs to bring back the Marty McFlies. You guys thought I wouldn't know that, didn't you? You guys thought I don't have the cultural knowledge to it. And I think if they bring back the Marty McFlies and run a marketing campaign around that, maybe that can save the company as well.
I guess the point is that this will take time.
Yeah, so the investor day
happens.
the investor day timing, which was supposed to be in November, is now being reassessed. They had just sent out the invite for that 2 weeks back. As you know, Phil Knight had personally talked about his commitment to John Donahoe, who's now outgoing, and so
That was last earnings when Nike had its worst day in the stock market ever, end of June.
That's right. So as you think about where we stand today, to me, you have first is going to be the return to a pull market. And as you know, that's where Nike aims for full price selling. I think that's basically over the next 12 to 18 months. And that'll be the margin stabilization story with the top line growth tied to the scaling of innovation, more of a 2 year to 2.5 years out, which would bring you to FY27 for Nike.
Is the degradation in EBIT margin from 19, is it an outlier? Is it like enormously large for a company this size? Or are there similar other comps?
So Nike historically has targeted a mid-teens type of an operating margin opportunity. They're now in the low double digits. And I think if you go back to this old guard coming back, it was more in the low teens. I think that's the opportunity. That's actually what we're modeling 2 years out. And if you put a mid-20s historical multiple on that, the stock is more or less fair value today. I think there is downside right now to our numbers and street numbers in particular for the next couple quarters. And as I said, potentially next year.
When Mr. Donahoe,
I don't know, man. Nike is a tough one. Maybe the CEO turns it around though, but that's one I have no position in. We'll see. 248 on Tesla, Intel 22. Where's Palantir? Palantir, wow, holding on again to 37.50, dude. It does not want to give up 37.50. It really doesn't. We're past 10:30. We're past 10:30. 10:30 slam wasn't too hard today. Things are pretty okay. Apple's green. S&P is green. Palantir is really green. Nvidia's down, so 10:30 got the Nvidia. Google at 163. QQQ is green. Intel somehow holding on to their gains as well. Again, the Intel news is just rumors with the Apollo equity, so until that becomes real, we don't know. Robinhood green. PayPal green. PayPal's up 2.3%. Even Alibaba's up 2%. So it looks like it's a relatively green day. Goolsby and Kashkari being bullish today or dovish today was important. Rivian's up 3%. We didn't even talk about the Bitcoin ETFs. We're going to get options on that pretty soon, folks. Are they available today? I don't think they're available right now. But the SEC approved them on Friday. Yeah, they're not available yet. But you will be able to sell covered calls and cash secured puts on your Bitcoin ETFs, which is only good for the underlying because you're going to have more activity in the derivatives market that is going to come down to the actual ETF, more inflows for the ETF. Celsius up 1.5%, SoFi below $8, $7.99. That is good for the underlying asset of Bitcoin itself. So I think that's super bullish. I think another 50 bips is super bullish. Options on the ETFs is really nice, and that should bring in a ton of more momentum when it comes to Bitcoin. Is this good accumulation level for Enovix? My thought on this is the same that my thoughts have always been. Enovix, again, is a startup that is public, and you're betting on really big deals with companies like Samsung and Apple to bring out their battery technology to the masses. The rumors of those deals are already secured. I think some of those deals legit have happened, even though we don't have dollar figures on them. And so that's why the stock's even worth $1.5 billion, which is a lot for its revenues. But yeah, if you believe in the battery future, I think Enovix is a winner here. It might be dead money for a while if it takes time for it to play out. So I don't know. I don't have a position in Novix. It's a bit too speculative for me. I kind of, if I miss out on a Novix, I kind of don't care. But yeah, it's one of those. It's a YOLO. I feel like it can go to 0 as much as it can go to 30, and it's primarily based on if the battery technology works. Now, granted, the management of the Novix is top tier, so the idea that it goes to 0 is less likely, in my opinion, versus it going to at least like 15. But they've got to get a real deal. And the problem is the Vision Pro, I think, was one of their core deals in terms of mixed reality for them to be able to land like a partner to implement their batteries on. But I don't know if mixed reality is going to become a real thing anymore. So cell phones might end up being the main market, but we have to see. When is Apple going to come out with a cell phone that has a battery life that is as spectacular as what Novix is promising? So it might take some time for them to ultimately scale up. Dylan says brands are cyclical. Nike will be in the top 10 years with all these parents who grew up in Nike are now dressing their young ones in Nike as well. Maybe you could say that parents are essentially, for lack of a better word, indoctrinating their kids into the Nike brand. But I think, kids who are graduating 22, 23 years old out of college, and they're influenced by some of the other things in culture that, don't really care that much about their parents' opinions on fashion. They're looking at Lululemon, they're looking at On, they're looking at Haka, they're looking at all these different brands. And I don't think the appeal of Nike is as exciting as it was. Now, granted, Nike still does $50 billion a year. Like, Nike's still a very big business. And China, you could argue, is one of the main reasons they fell this year. If they can clean up some of the stuff in China, maybe they don't have to stay at these levels. But I don't have any friends that care about Nike, dude. And in middle school, I did. In middle school and high school, I had a lot of friends who were wearing Nike hoodies and sweatshirts and all this stuff. Now I don't see people care about it too much. But yeah, I mean, if they re-evolve the brand, then maybe the brand starts to continue to get more momentum. But I don't think the brand is as relevant as it was before. Where's Palantir? Are we still at 37.50? 37.55. All right, so let me check the order flow now. I feel like 38 is still possible, dude. I mean, the momentum's there. It's touched 37.50 many times today. 38. 21,000 shares. So now you have a legitimate of a wall at 20,000. It's not the craziest wall, but you do have a wall at 21,000 shares. I don't know, dude. I mean, I don't I think it's possible if we broke through 37.50. Maybe we can break 38. Maybe. Chris says Nike needs to get more woke. Maybe that's what solves their solutions. Maybe that's what solves their problems. Maybe that's the solution. Get more woke. Maybe. Where's Tesla? Tesla. Wow. Tesla's trying to hit 250, bro. Tesla's going for it. 249. Tesla is going for it. Let me see the resistance on Tesla as well. Pound to 37.63. Robin to 23.10. Tesla at 250. The resistance for Tesla. Okay, it's going to be a little hard, guys, but it's possible. It's going to be a little hard. 260,000 shares are waiting at $250. So that equivocates to $65 million. If anyone has $65 million and wants to do us a solid, please help us out. But if we don't, then we might have to wait on 250. What's happening to NVIDIA? Is NVIDIA getting hit? I don't know. It's weird. The semis are kind of, maybe market saying, hey, Tesla's 1010. NVIDIA has been NVIDIA, but it's up a lot this year. What if we sell off NVIDIA and buy some Tesla? Maybe that's what's happening. That is weird, though. It's not going up with the rest of the Mag 7. Where's SMCI? SMCI now lost half of its gain today. That was a really weird price action, dude. NVIDIA went down. SMCI went 5%. Now SMCI gave up 2.5 of that 5%. And NVIDIA is still red. AMD, I would imagine, is red. AMD is barely up. It's up 0.01%. I don't know. Maybe the market's kind of, if IWM is green. No, IWM just went red. Wow. NVIDIA's red and IWM is red. I think all that money's just going into Tesla. That's what it feels like. if IWM can't catch a bid and Nvidia can't catch a bid, maybe all of it's going to Tesla. Maybe all of it's coming to Palantir as well. Palantir and Tesla. Microsoft slightly green, and then the S&P green as well. Meta falling a little bit from that 573 now at 568, but still green for the day. And then Google right here, 163. Robinhood 2310. Shopify 79. FedEx 257. Starbucks 94. CrowdStrike 298. Rest of the market's relatively. Where's Rocket Lab? Rocket Lab's up as well. Look at that, almost up 1%. 752 on Rocket Lab, which is not too bad either. Mitch, you want the 65 million in Bitcoin or ACH transfer? You can do an ACH transfer. That's good enough. That's well, 65 million for a company worth 800 billion. Does that even matter? I mean, we could break through that, right? Tesla 249, we could break through it. It's possible. Volume on Tesla is 34 million. Volume on Palantir is 30 million. That's crazy, bro. Palantir is hitting Tesla volumes. That is absolutely insane. Let's see. Jimmy says, I need to change my ringtone to emits wow. Look, it's not a horrible ringtone, dude. As soon as you get a phone call, just wow. You know, all right, I gotta pick up the phone here. If China agreed to work with Elon to steal his tech, then will they rug pull? You know, I think China is so important for Tesla's growth that I think Elon knows there's a chance China could steal their proprietary tech. But I also know Elon thinks that, hey, without China, which is 25% of their sales, you know, Tesla's numbers are worse than they currently are. So I think he's willing to take the risk. I hope they don't steal FSD and they give it to like all the other car companies. But it's one of those risks you gotta take, dude. Because if they don't have China, Tesla's not going to succeed. So I would imagine, you know, they protect it well. But the United States FSD launch is what everyone cares about. 249.20 right now in Tesla. That's what everyone cares about. Palantir maybe making its way to 37.70. That would be a new 52-week high. There you go, 37.70. All right, folks, 37.70. Now the show might be beginning at 37.70. We can hold that and make a little bit. We are so greedy, dude. We are so greedy. Like it's like ridiculous how greedy we are. But like now it's time, dude. 38. But what if we go up $1 a day for the rest of the year? That's where would that put us at? How many days are left? 100 days, $137 stock. Maybe. It's crazy, dude. Fucking crazy. But let's see. 38. I mean, we're here. Might as well enjoy the moment, man. Sometimes you got to live and enjoy the moment. Sometimes you legit got to be in the moment and enjoy it and have some fun. And this is a fun moment, bro. This is the fun moment. And you know, sometimes you got to remember how tough it was when we were barely above $8 on these random market opens. And we would all just be hoping one day things would change. Well, things have changed. And things have changed very aggressively when it comes to Palantir. My covered calls on Palantir are messed up. Look, I still think covered calls are going to be okay. Even if you're from the 34 to 40 range on covered calls, I think you'll be all right. I think you'll be able to roll out of it. You'll navigate that. But for now, let's not worry about the covered calls. Let's just enjoy the moment. let's just enjoy the moment, dude. Going up $1 every day requires less and less percentage of the market cap. That's a good point. That is indeed a good point. Changing my ringtone to holy crap. You guys got to change your ringtone to goodness gracious. That's the best ringtone, dude. That'll be the best one for you guys. You know, it's really interesting. There was there's some people that you guys don't know on Twitter. And they are part of the Palantir community. Maybe they're even watching right now. And these are people that have been some of the most toxic people over the past couple of years. So some of the people that are like Bay Ray, some of the people in the chat, you guys know these people. But they have been so toxic. When I say, you know, people bullied other people for being bullish on PayPal, these are the types of people I'm talking about. And these people, for the past 2 years, have just bullied everyone. When I mean bully, I mean legit bullied if you were bullish on another stock outside of Palantir. And to me, I always thought that was so toxic. Like, and if you sold, like Arnie, for example, he sold some shares at $11, $12. Why? Because Arnie He lives by himself in Italy. He needs to manage his bills. So when the stock goes from 7 to 11, he's going to take some off the table, right? Like it is like, I noticed that anytime someone in the chat has said, I'm selling Palantir or I'm taking some profits, I have never been upset about that. And I never want to get upset about that because who the hell am I to judge someone's personal finance? Like, that's just like, I can offer my perspective on if I would sell or not, but there's never supposed to be judgment there. So there have been people in the community, and there's only a couple of them, but there have been some people that have been so abrasive, so mean, like just genuinely horrible human beings to people that were bullish on PayPal, even if they were bullish on Palantir at the same time, or bullish on SoFi, or bullish on Robinhood, or whatever, right? These people, ironically, it's a hell of a story. A lot of you guys don't know some of these people, and I never respond to them. I never want to give them attention because if I respond to them, they get more attention. But these people, ironically, it's so ironic, but it's ironic. It's so ironic, but it's ironic. They sold all their Palantir at $30. And it's just the most funny. Me, a bunch of group chats that I'm in, we discuss these people. It is hilarious because these bullies, these just like honestly assholes that have been upset at people that had a diversified portfolio that wasn't 100% Palantir or took some profits at $18 or whatever. They ended up selling at 30, and now these people are shit talking Palantir on Twitter. And again, I'm not going to say their name. I'm not going to say the account name. I don't want to bring attention to them, but it's just hilarious to me. It just shows how sometimes bullies end up getting humbled. Not only did they sell at 30 because they thought the valuation was getting ridiculous, they did the same thing that other people did for the past couple of years. And now the stock, every dollar runs up. Those are hundreds of thousands of dollars of profits they missed out on. And the worst thing about this, a lot of you guys don't know this as well. The worst thing about this, these people, particularly, I'm not talking about Chris, by the way. Chris just plays like a fun bearish character. I'm not talking about Chris at all. I'm talking about people in the Palantir community that had a lot of Palantir that just hated other people that were bullish. When the Palantir merch store came out, every time Iliano gets on the show and we're like, well, there's some people that are super, they'd act like haters around the merch. We're talking about a specific couple people that quite literally told Iliano and Chad to their faces, you guys are bootlickers and your stock-based compensation should go to zero because you guys are launching hats. This is what these people had the nerve to say. I promise I'm not talking about Chris. This Chris knows who I'm talking about. Chris knows this is not about Chris. These are actual toxic people, dude, that legit told Chad and Iliana to their face, you guys are scum and your SBC deserves to go to zero because you guys are promoting hats. And that's why when Iliano gets on the show, he's like, well, wait a second. Hats are just like a fun thing for the community. We're not making any money off this. This is something to help the community grow. And you've got these toxic Palantir shareholders that are just like, hats are horrible. In fact, part of their logic for selling at $30 was because they felt hats were the top. They said, hey, hats are the top of the stock. The fact that Palantir is launching hats are the top. See, Bay Ray knows it's not Chris. It's not Chris at all. It's Chris can be fun, being bearish. Chris is not toxic. These people I'm talking about are legit toxic. And it's just so funny. The stock has gone up 40% since they sold. S&P inclusion, they sold right before S&P inclusion. The hats have gone only, I think Ileana said they sold out. They had 350 purchases on last Friday, the day they launched, in like 8 hours, right? The community loves the hats. People are getting signed hats by Dr. Karp. Karp's the happiest person in the world. And these people are stuck. They are stuck in their toxic bully caves with their gains on Palantir at 30, which is fine. I have no issue with them selling at 30. The problem is they made fun of everybody else for the past couple of years doing this. And so, again, a lot of you might not know that this thing was even happening, but when you're in the Palantir community, like myself, you get access to a lot of different perspectives. And there were certain people, there's only a couple of them, but they were so mean to everybody else. And it's just so nice to see the bullies get humbled by a stock that basically says, screw you. You've been upset at people for the past couple of years when we were all part of the same mission, just because they weren't 100% inside of Palantir because they had a little bit of PayPal or something. And now you sold and you missed out on so many gains, and you did the same thing those people did. And your logic was worse. Your logic was not even valuation. Your logic was based on hats. But this is what happens. This is what happens sometimes. It happens in all communities, to be honest, 100%. And that's the one thing I'm thinking about for Palantir. The Tesla community, you've got so many like internal conflicts in it. You got the Gary Blacks of the world, the Gordon Johnsons, you got Farzad, Sawyer. Like there's all these internal pieces of fighting that are happening. Palantir doesn't really have that yet. Palantir doesn't have that yet. There's only a couple people that were pretty toxic, and they've been humbled decisively, I think, over the past couple of weeks. But outside of that, the community is still pretty strong, and there's not all these internal narratives or storylines of people. It's like high school, like this person hates that person. That's not happening in the Palantir community. Now, I think when the stock gets to 100 or something and you have millions of people, just like Tesla has millions and millions of people, that stuff will probably happen. But for now, it's a special time because it's pretty much a couple 100,000 of us that like just love each other and that are excited for, Palantir to keep growing. But it is nice to see some people get humbled because those people, they did not deserve to be this mean over the past couple of years. Tesla at 248, SMCI at 464, IWM at 220, Enovix at 872, Apple at 228. Apple still green. Microsoft's down a little bit. SoFi still below $8. Google at 165. Robin at 2307. Costco green on the day, 915. They're up about 1%. Look at that. And you got Palantir here at 3748. Apollo, $5 billion investment in Intel is not official yet, but Intel is up on that news. Maybe that does happen, but that is not officially happening yet. Thoughts on what's next for Palantir? When will the average worker have admin access to their permission level of data and be using Palantir day to day? When will the masses be doing this? It's a good question. I think AIP now, which is Palantir's basically version of a consumer product, has to scale aggressively, and I think it's far from getting to that point where it can scale. I think it'll take some time, but when I think when we have hundreds of thousands of people using AIP daily themselves to build stuff, that's when we're going to start to see that scale in the enterprise rapidly tick up as well. But that's going to take time, and if the faster they can adopt that throughout the masses, I think the faster you're going to have more developer evangelists essentially try to get Palantir into their businesses. And that's the part that worries me about the valuation. Like, we're not there yet. Like, we know we're not there yet. Like, as excited as we are, we're not at that level of hyper growth. And it's valued as if it's beyond hyper growth right now, right? So that's the part where it's like, if they show the hyper growth, we're going to 50. It's just that simple. Next quarter, if they show 35% growth, we are going to 50. If they don't, if we just hold on to these levels, I'm happy. But if the market gets upset, maybe we tick lower. Granted, we got rate cuts coming up, which is also going to help. So I think there's a world in which, we hold on to these levels, even if earnings are not super, super big hyper growth. Here's Carp. Now that we're in the S&P 500, talk about S&P 500 inclusion at AIPCon last week.
And the idea that we could be in this exclusive club of the S&P 500 was something that, believe me, everyone internally is like, okay, Alex, just shut up about this idea. This is too much. No way we're going to get this to work. And it worked. And for us, this is just like at Palantir, it is just arguably the biggest event that has happened to us because, it's just, you are actually a real serious company. And it was done on the back of products that are powerful enough that we could keep our company the same size and increase the number of partners we have and the revenue. So, and I would say, while getting on the S&P, we stayed true to our values. That's kind of obvious and sometimes annoying to our partners because we have to speak about certain truths that maybe aren't popular, but it doesn't make them less true. But we also have the very best partners in the world.
Carp's happy, man. Carp is so happy. He is so happy about this. So 3750. I don't know if we break 38 today, but we've touched 3750 at least 5 times in the past hour. So it looks like it has the momentum. We got to see if the market can take a little bit higher. Tesla 247. Some of this buying also is just because they're in the S&P 500. So you've got more fund managers buying up a little bit more today. But that close at 3720 on Friday was telling. Kind of felt like the momentum was coming in, and now we're seeing that right now as the market opens. S&P at 569, Celsius 33, SoFi still under 8, Meta 566. By the way, Meta just got upgraded by Goldman. No, by Citi. Citi updated them to 645 from 580 while maintaining their buy rating. That's another reason probably Meta is up today. Robin at 2302, Tesla 247, Palantir 3749, and then you got the S&P at 569.17. John says it really has been quite the journey watching Palantir over the past few years to get here. Karp hasn't been this happy this whole time I've been watching the company. Yeah, dude. And you know, from someone who was actually at AIPCon, seeing him, he was just ecstatic. He was just absolutely ecstatic. And you know, now I think he's ready to take this even further. But he was pretty damn happy. The whole company was pretty damn happy. The employees were happy. Like everyone was just like, we did it. You know, everyone was. It's one of those things. Like, damn, we actually did it. So now we gotta just keep working and see how they can take it further. All right, folks, that's it for me. I think we're done for today. No other crazy headlines. We'll see what happens on the market close at 345 if we can hit that 38 level. But if not, holding 3750 wouldn't be the worst thing in the world either. And yeah, that's pretty much it. Tesla also at 250. Let's see if Power Hour can take Tesla and Palantir up to those levels, but we'll see if that plays out. Word of the day is tootle.
Tootle.
To move or proceed in a leisurely way. We tootled around town without any real destination in mind. He likes to tootle through the neighborhood on Sunday afternoons. This is such an interesting word. Okay, I'm not going to lie, though. I do tootle around my neighborhood on Sunday afternoon. Like I always go for a walk on Sunday, and I guess I'm tootling, dude. That sounds like such a funny word. Tootle. All right, yeah. So if you walk around with just in a leisurely way without caring too much about anything, you are tootling. So there you go. That's definitely an admit word, dude. Honey, I'm going out for a bit of a tootle. I'll be back in a little bit. Could you imagine, bro? This is definitely an admit word. This is absolutely an admit word. All right, that's it for me. Thank you, everybody. 345. We'll be back. We'll see if Palantir can hit 38. Tesla 250. No earnings today. We got earnings tomorrow and on Wednesday. And we'll see how the market ends up at 345. Bye, everyone. Have a good one. See you in a bit.